you're either on the table or yes. So we have an opportunity as citizens, yeah, through public participation, which also became very prominent in our discussions yesterday. Through public participation, we can be able to challenge any decision that the government has made that we're not very comfortable with. Okay, so to the lady who asked me about the minimum task, we know the High Court made the ruling, the petition and all of that, but still it will come back to us as citizens, whether we say yes or no. Again, we learned that, or we heard from our speakers that we don't have to blame the past. The past is gone, but we have the opportunity now, right? So anything that happened in the past should inform the present and the future, right? But we don't have to be dwelling so much on the past, because the opportunity, when we keep focusing on the past, we lose focus of what is happening now. Yeah. How many know that there is a tax evasion? It's before the court. I hope I will not be. But there's a tax evasion case that's going on, right? How many know about that? How many know about the tax evasion, whatever? It's running into several millions of Kenya shillings. Actually, the mention has been set for this month, before the end of this month. So those are some of the things that are happening presently that would interest us, because if somebody, and we also saw, because one of the other things that we were looking at are the multinational practices to avoid or to evade taxes. And so we need to take advantage of the opportunity that we have now. And that came very prominent from Honorable Abisai's remarks. So we had a panel that was looking at IFF, yeah. We had a panel that was looking at IFF and its effects on revenue realization. The panel was moderated by somebody. Can somebody give me a name? Who moderated that panel? It was a very heated, it was our panel, our first panel. How the IFF is affecting revenue realization. By show of hands, who can tell me who moderated that panel, or one of the panelists? Yes, my brother. You say your name, the organization, and who, and the answer, please.
My name is Edwin Gatim from Multimedia University. The moderator was Jason Braganza.
Please, let's put our hands together for him. Jason moderated that session, and the panelists were Honorable Shakil, is the APNAC chair. APNAC in full. APNAC, because that's another key parliamentary caucus that we need to be engaging with all the time. APNAC in full, APNAK. Association, yeah? Yes. Oh, sorry. APNAC in full, nobody, okay. Homework. And then we had Sheila from TI. TI, we all know TI means Transparency International, right? And then we had Michael Otieno from NTA. So the panel was looking at how IFF is affecting revenue realization, and they looked at it from different angles. Yeah, who can tell me some of the things that were discussed, or what came out prominently from that discussion? Yes.
Morning, I am Mondino Kello from the University of Nairobi. I think one of the things for me that came out as strongly the fact that what we call IFF is actually a Western concept, such that now we have the shifting of the blame from the way MNCs are exploiting resources. It has been shifted from that to corruption, so that now if you look at the percentage of MNCs when it comes to IFFs, it is about 60%, but corruption contributes only 5% on that.
Thank you. Please let's give him a round of applause. What else did we learn from that? So we learned that corruption is only 5% of the IFF, right? And MNCs here means multinational corporations, how they're exploiting, the ordinary Kenyans by avoiding to pay their fair share. There was an example that was given by Michael, who can remember that, where a company is declaring profits in another country, losses in Kenya. We all remember that? We all remember that? Yeah, the flour company. We remember that? Yes. So the issue of taxation. Okay, let me begin from. How many people do not pay taxes here? If you don't pay taxes, please just raise your hand. If you don't pay, we all pay taxes, right? Sorry? Legally. Thank you. So how many people here pay taxes legally? Religiously? Are we happy to pay taxes? Are we happy? So again, there was a discussion about taxation and tax compliance and how people pay taxes, yeah? I'll tell you for free. And there's a study that was presented here by who? Who can remember the organization? Twaweza, right? How many Kenyans from the study are happy to paying their fair share of the taxes? It's very minute. Actually, it's very, very small. If you'd ask me, quite a number of people are looking for ways to avoid paying taxes, right? Tax avoidance is legal. I did say that. It's legal. Tax evasion is illegal, right? So many people are finding ways or are trying to come up with ways to avoid paying taxes. Because why are we not happy to pay taxes? I'd be very happy to pay 40% of my salary as taxes to the government when my kid goes to a public school and he gets all the services. Quality education. I don't have to worry about taking my child to an international school or academies. Yeah, I'll be very happy to pay 40% of my salary as taxes. If I go to KNH as the public hospital, I get all the services that I require. I don't have to go to Nairobi hospital and the private ones and still pay from my pocket or pay a private insurer for the health services. So people are not happy to pay tax because of poor service delivery. Are we together? Thank you. Again, Michael underscored a point here that just to quote him, the issue of resource exploitation from Africa. I want to quote one speaker. I think there was a conference in South Africa where a lady mentioned that Africa is the home of all the natural resources, right? Actually, most of the gold come from Africa. Yet, Africa is the poorest continent. Is that true? That's true. Yeah? So why is it that we have the largest gold deposit, yet we are it's because of these practices. They mine from us, they mine from Africa, but we don't get to benefit from the resources, yeah? Moving on quickly, I know had a few minutes to do this. So we also had a speaker who opened the session from the treasury. So in his remarks, he challenged all of us. Yeah. You know, when you talk about IFF, you can look it at different angles. But for him, he was keen on the awareness. Yeah. Are we aware that how many people before the conference knew something about illicit financial flows or have heard that term somewhere? How many before this conference? Less than 20%. So you can imagine, very few people knew about this topic before this conference. So there is a gap, yeah, in terms of information. So people are not aware of the illicit financial flows. So as I wind up, I'll just wind up by mentioning something about the sessions we had in the afternoon. Or before I go to that, I think, let me say something about Sheila, what she contributed to the discussion. And for her, she was very keen on the role of Parliament in combating some of these issues. Because we know we have elected members of the Parliament, right? After every 5 years, we wake up, go to the ballot, yeah? 2022 is almost here. We'll wake up at 3 a.m. to win head of state commendation to elect people. On a light note, people who would be representing us as parliament, as parliamentarians or as MPs. But do we get to question what the role they play as parliamentarians? What are their 3 roles? Very quickly: oversight, representation, and legislation. Are you happy with your MP? How is performed in terms of representation? Are you happy with your MP? How is performed as a legislator? Are you happy when they passed the minimum? Actually, I had a brief chat with one of the honorable members. They were rallied to pass the minimum tax. Actually, it was a call from, we know how the system works, right? So are you happy that just a call can make them pass a law that is so detrimental to the common wananchi? Yeah. So that's a question that I would like you to take to the ballot as you vote in our next MP. So in the afternoon, we had the merge session where we had different speakers giving us their thoughts about different topics. So we had a topic on tobacco. I don't know, this one elicited a lot of debate. Tobacco taxation, where we need to increase the tobacco tax so that we can do what? We can do what? We can help you not to end up in KNH with tobacco-related complications, because the amount that you pay as taxes when you buy a packet of tobacco, as Celine Award told us, is so negligible that if you are to fall sick today, yeah, not even 1% of your hospital bill will be covered by what you pay as taxes. So that's why we need to raise that tax on tobacco so that there's at least money somewhere to support your healthcare needs, okay? And then also we realized that there's an issue with taxation when it comes to tobacco products, yeah? So there's need to streamline the taxes so that both the filtered and the non-filtered are taxed at the same rate, because we know there is a discrepancy, and according to the FCTC, yeah, that is the Convention on Tobacco Control by WHO, we know that there's a percentage that we need to attain as a country, that is 70% on taxes on tobacco and tobacco-related products. So we are yet to, I think we are at around 58 currently, so we are headed somewhere. And then we had a presentation from Dr. Kumba, the paper. Okay, thank you. So we had a presentation from Dr. Kumba. And Dr. Kumba, in his paper, we were looking at the human rights approach to taxation. We told us that tax is a human right issue. We all remember that? Yeah? So please, as I wind up, I know we were all here, we have all the footages. We'll be sharing with you all that was discussed, the reports and everything. I thank you all.
Well, thank you so much indeed. Thank you, Brother Stephen. We appreciate the recap. And of course, because of time, we had to cut it there. But we really want to engage further as we move on today. And we have panelists who are ready, key presentations. And as we start on a lighter note, very quickly, there were two brothers. These two brothers were hooligans. They were thieves, they were robbers, they were murderers, they did all sorts of evil. One day, one of them died. So the remaining brother really found it very hard to find a priest who could preside over the funeral service. But finally he got this priest and he told the priest, listen, you know, we've been very horrible people. We don't have a good track record, but at least as you eulogize my brother, please, whatever you say, just make this statement. He was a saint. Well, you're saying I eulogize your brother, then I say he was a saint. Yes, that's all. You can say everything else, but please say he was a saint. The priest sat down and thought, okay, I'll do it. So during the funeral service, he sat down, started speaking, and he said, you know, the gentleman we are eulogizing today was a horrible person. He was a thief. He was a robber. He was a murderer. He did all sorts of evil. But compared to his brother, he was a saint. But you know, the big question is, you are a saint compared to whom? Today, we are saints compared to whom? As we talk about corruption, as we talk about illicit financial flows, the perpetrators, are we going to stand and say we are saints compared to whom? Or can we say there are standards that we must uphold, all of us, so that we create a better Africa? By 2063, we can tell a different story of an Africa that is different, that is self-reliant. And to really start us off in this conversation, we've been talking about borrowing. We don't borrow more, we borrow less. But what does it really mean? And to really bring that conversation to the table, I state this gentleman, an intellectual in every right of the word. Please put your hands together for Mr. Kwame Owino. Mr. Kwame Owino. Where are you? We are waiting. We are waiting. We want to learn from you. Is Kwame in? Excellent, excellent. A big, you know, you need to say, by the way, remember the hashtag we have. You really need to now sit down and listen. And I'm sure you've heard from him. Please come. You've heard from him in the past. I still ask you to listen to him as though this was your first time, so that we take this conversation further in a big way. A big round of applause to Mr. Kwame. Karibu sana. Welcome, welcome, welcome.
Good morning, everyone. My name is Kwame Owino. I work at the Institute of Economic Affairs, and Thank you for the invite to speak to you about debt sustainability and its effects on the economy. And thanks for the kind introduction. Thanks for the kind introduction. So I have about 12 minutes to speak about, as the title says, debt sustainability and its effects on the economy. And I wish I knew what the collection of students who are here, or rather the audience here, what your backgrounds are, but I will assume that you're college students, not that it matters, but it's usually good to just feel and understand what my audience is. So, and I have a presentation here which will circulate later. I didn't carry a USB, so we can't beam it, my apologies, but it will be circulated and you can use it for your record. So what will I speak about? I'll speak about 4 things. I'll speak about what is debt, public debt, and of course that's saying the obvious. And then I'll talk about some numbers about what's the level of public debt in Kenya. I'll talk about the effects, which is the main discussion today. And then finally, I'll talk about so where do we go from where we are. I try to be a good storyteller, which is basically after I've told people some bad news, you mitigate it. Okay. So, and I'm thankful for my colleague, Leo, a guy seated right at the back. He and I sat together to prepare this. So obviously he takes credit as well for the good things. And if a very difficult question comes, then he'll be responsible for answering it. Okay. So one of the things that we talk about, and for many of you perhaps, in the last 4.5, 5 years, if there's one song that we at the Institute of Economic Affairs have sung, and the idea is a think tank, our work is to carry out research and to use that work to generate public discourse around key issues in Kenya's economy. And so let's start with what is public debt. Remember that debt is actually a result. It is not a cause. It is a result of public spending above public revenues. So for instance, if the government of Kenya receives revenues of, say, 1,000 shillings, but spends 1,200, that additional 200 shillings could be financed in various ways. One of them is debt, principally, or it could receive grants or things like that. But the government of Kenya since the year 2014, and specifically 2014, not that it matters, but it coincides very neatly with the Jubilee administration's first election, has been spending 400 billion more than the revenue service has been collecting. So it's as if you collect, it's as if your income is 1,000 shillings and you're spending 1,400 shillings every month. Now, it doesn't take too many months before all that piles up. So the public debt is the pile up of all the deficits. And the deficit is that difference between how much is collected in revenues and how much is spent. The reason this definition of debt is important is because debt is the result of the piled up deficits over time. So in Kenya, we've had deficits coming from about 380 in the first year of the Jubilee administration, all the way to this year, where deficits are going to be about 700, no, close to 900 billion. That's huge. Remember, they're accumulating. So what that means is that if you have a gap, your gap goes like this in terms of your income and your expenditure. Remember, debt is also significant because debt comes with an interest rate in the sense that debt needs to be paid. So you're paying debt for the fact that money is borrowed. So if you borrow 200 shillings, let's speak about that guy we started with. He earns 1,000, spends 200 more, so he spends 1,200. Remember, at the end of the second month, he doesn't owe 1,200. He owes the 200 in addition to the interest that applies to the 200. And so if he borrows more, it compounds and compounds and compounds. So that's it. Now, for me, I hear politicians say in Kenya, and sometimes some of us in civil society, and I know civil society is not one thing, but some clever people in civil society also say things such as borrowing is not bad. I don't know that that statement is unequivocally correct. It's a statement by clever people. On the whole, I would prefer that government spends as much money as it collects in taxes for 2 reasons. One is a justice and moral question, which is we shouldn't spend money and ask future generations to pay. It's unfair. So when somebody says that borrowing is not bad, I'm not too sure that they say that. And the reason is, the second one is a legal question. The Constitution of Kenya says that public debt and public expenditure should respect the compact. Now, this is my paraphrasing, but the compact between generations by not transferring obligations from one generation to another to the extent that is possible. So anyway, that's it. So now, at the beginning, and debt itself was, of course, also has two flavors. There's debt that is domestic, and there's debt that is external. So external debt in total is debt that is owed to foreigners, and often it is owed in foreign exchange. It has a different implication for its effects. Domestic debt is debt that is owed in general to Kenyans, or it tends to be owed in Kenya shillings. So you owe debt in terms of treasury bills and treasury bonds. So every 2 weeks, the central bank, on behalf of the treasury, floats a voucher, a tender. Each of them has a number, and people, banks, including yourselves, if you have a bank account, you can buy through your bank account bonds and bills. And all those are ways in which government finances the deficit. So you talk about the fact that deficit is that. So there's a component of debt that is foreign, there's a component of debt that is local, and each of them have different flavors. The first one is that foreign debt is paid for in external currency, which means exports have to be acquired in order to pay for that. And the second one is that domestic debt has to be paid for domestic. So let me rush to the component. If you talk about what it is today, and again, for us at the IEA, we put together our numbers. We just try to put together numbers so that it's numbers that we can defend. We hardly say that we made a claim and person X should have clarified it. So let's say if you put together the declared public debt in Kenya today, right? If you go to the central bank and if you go to the treasury, the reported public debt is something like 7.6 trillion shillings. However, if you put together announcements and the contracts that government has gone into for borrowing and put it all together, our estimation is that the total public debt today, in net present value, in terms of today, if you have to pay all of it today, is not less than 8.5 trillion shillings, about 8.6 or 8.7. So, and we know there's more. so basically that's the first part. Now, of that 8.6 billion, this is an important point. 55% of it is owed to foreigners. 54% of it is owed to foreigners. 46% of it is owed to domestic people in banks. The other way about thinking about the effects of debt, because now we are thinking about the effects of debt, is to ask ourselves, what's the tenure of debt? Now, the tenure means we are still speaking of this guy who earns 1,000, borrows additional 200 every month. We are asking ourselves, how much time does he have to pay back the 200 shillings that he's borrowing per month? That's called tenure, the tenure of the debt, basically. Now, if you take the average tenure of external debt, the average tenure, meaning if you take all the external debt, the 55%, 54% of debt that is owed to foreigners, if you take it all today, how much time do we have to pay it in total? Time, in terms of what's the tenure of the loans, what's the age of the loans? And the average is more than 20 years. Basically, much, much higher. If you come to domestic debt, the average is actually, most of it is actually less than 5 years. So you see the point. Even in speaking about public debt, it's important to understand the tenure of debt and which one comes quicker. So the domestic debt, while it might be smaller in terms of its quantum, right? But it will be paid sooner. So what that means is that our worker, this guy that we're using, actually needs to pay his debt much, much sooner. So the guy he owes, who's a neighbor from the other estate or the other, wherever they get it, doesn't need his money until 1 year is gone. But the guy who's his buddy or maybe his roommate or the person he lives with needs the money like tomorrow. So one is due in a week, the other one is due in a day. The implication of that is the domestic debt actually has a bigger burden on the immediate sense because you have to pay for it on a regular basis than the external one. The risk for the external one is only affected by the exchange rate. So that if the exchange rate moves, then obviously the quantum of the debt moves. So for instance, our calculation at the IEA, based on today's numbers, is if the shilling depreciates against the dollar, if the shilling depreciates against the dollar by 1 shilling, so that it comes from, I think it's 111 now, or 109. So let's take it at 110. If it moves from 110 to 111, the Kenya shilling against the dollar, because part of the external debt is denominated in dollars, right? It moves the total debt quantum by between 28 billion to 31 billion shillings, because it has to be paid for in dollars. So you'd have to get the shillings, buy the dollars, and pay for it. So that's the risk. It's called the exchange rate risk. In Kenya, the effect of borrowing is this. So in this year, because I'm concerned for time, so this year, in the year that we're talking about, 2021, 2022, from 1st of July to 30th of June next year, the government of Kenya will be paying 1.17 trillion Kenya shillings in debt. 1.17 trillion Kenya shillings in debt. Of that 1.17 trillion Kenya shillings, right, 700 billion is being paid to domestic debt owners. Of the 1.1 trillion, 700 billion will be withheld domestically. About 400 billion is going out to be paid to external debt owners. So you can see that the effect of the tenure of debt is very different when you consider the domestic and the external debts separately. So this is important for me because I sometimes hear advocates argue as if the only problem in Kenya is the external debt. Actually, in terms of solvency and immediate payments, the domestic debt is far, far more onerous in terms of it has to be paid for far more frequently. Why? Because its tenure tends to be shorter. And the quantum, of course, is not as high, but if you have a loan, 100 shillings to pay over a year and 100 shillings to pay over 1 month, obviously, of course, it might be trivial, but I use that example to show that tenure is important for sustainability because we're talking about debt sustainability here. So then what are the effects? The effects are these domestically. The government of Kenya needs to borrow at least 20 billion shillings every 2 weeks to be able to handle its debt management, because domestic debts come due and you have to pay for it. What is the effect of that? The effect of that is that in 2019, let me speak about in 2014, so I have a table here. In 2014, of the total commercial loans, in the terms of the total commercial lending by all banking and financial institutions in Kenya, right? Of the total in 2014, 24% was taken by the government of Kenya. In other words, the government of Kenya took 24% of the money that banks were lending in 2014. That is by treasury bills and treasury loans. So a treasury bill is an instrument of debt that is due for payment in 1 year or less. So it can be 91 days, it can be 182 days, or it can be a year. So that's the tenure. So the tenure of a treasury bill is short. A treasury bond is one that is due for longer than a year. So it's a year or more. So in 2014, of every 100 shillings of commercial lending in Kenya, 24% of that money was taken by the government of Kenya. In 2020, last year, of every 100 shillings of lending, 34% was going to the government of Kenya. Remember, in this 6 years period, the Kenyan economy is, I think, 38% larger than what it was. So it's a bigger pie. But of that bigger pie, the government of Kenya is even taking a bigger share. The effect of that difference between 24% to 34%, all in 6 years, is what? Is what an economist calls the crowding out effect. Why? The crowding out effect is this. Banks know that if they have to lend government of Kenya money at 10% or 11% and sit on a desk, lend that money, and wait 90 days, there's no reason they should lend to an enterprise, or there's no reason they should lend to another corporation to risk it. So it's very rational behavior for a person who's lending. So what that means, the government of Kenya is sweeping a greater share of what is available for lending so that business can be created. It's called the crowding out effect. It's real. If you look at it, banks are very cagey about lending to businesses. They'd rather lend to government because they know that the government of Kenya this year will have to pay loans of 1.17 trillion, and it has a deficit of about 900 B. What shall we do? Let's wait. Why should I lend to you 5 million shillings, which means it's very, very small loans. The transaction costs are high and monitoring is high, when you can simply leave it aside and every 2 weeks, the government of Kenya will be coming to sweep 15 billion shillings, 20 billion shillings off the floor. That's easy. So that's one of the effects. At the domestic level, the crowding out effect of businesses and the vitality of businesses and sending money to businesses has actually reduced, measured in proportionate terms. So that's that's one expected effect. I think the other long run effects of debt is basically one of the things that happens, because if money is not being made available for businesses to expand and to invest, the first thing that happens is capital formation suffers, which means the rate at which people form businesses and actually maintain capital by keeping savings suffers. Because people don't have the possibility of using that capital to sustain. And an extended effect of that job formation actually does reduce. What else is the effect of a sustained deficit? You see, one of the things about a deficit is, and I think sometimes when people say that, well, borrowing is not bad. For an economist, the mathematics suggests this, that they're lying to you by saying borrowing is not bad, but what they're telling you is that high taxes are good. Because if you have, like this year, the total expected tax take of the government of Kenya is 2 trillion. And I think that's extremely, extremely, extremely ambitious, right? But the total spending is 3.6 trillion. What that means is that government expects to borrow a lot of money in between to cover that gap. What that gap represents, a deficit simply represents future taxation, because it will have to be paid for. So the equivalent of someone saying borrowing is not bad, you should ask it, please stop using your euphemisms. Tell us that you are saying that taxation is good, and then let's debate that. Because to say borrowing is not bad is simply to say we are deferring taxes. Instead of you're paying it today, you're going to pay it into the future, or we're going to kick it up to your relatives. I mean, to your kids and into the future. Now, I don't think that future people are more important than us. Sorry, I mean, that might be controversial. But I think responsibility simply requires that everybody should pay his way. It is also possible that we are building, I mean, the government of Kenya is building huge railways, well, that one's going nowhere, huge overpasses and all this, which might be inherited, quote unquote, by kids. So you'll give them also better infrastructure and stuff like that, maybe so. But at the same time, I think I'd rather every generation decided what its investments and what its taxes should pay for than for us claiming the income of future generations by giving them a train to nowhere, overpasses that maybe all of them will not necessarily find useful and stuff like that. So I guess that's one of the things that happens. One other thing about borrowing, it affects economic output and wealth. But one of the things about borrowing, huge borrowing by government, is this. It redistributes income away from labor towards capital. How does it do that? For instance, it is only people who are buying government treasury bonds and banks. So for instance, big banks. Some banks in Kenya make so much money from trading government bonds that if government borrowing went down, some of your favorite CEOs might have, should I say, a night without peace. Maybe, no, maybe they'll have peace, but only half of the night would be peaceful, because they need to find new business models. So I guess that's one of those other issues that we ought to bear in mind. So if someone says that borrowing is not bad, that might be true. But why don't you ask him to say that you're saying that higher taxation is not good? Because what they're saying is that we want to spend more than we've taxed you this year, but it's called the fiscal lie, which is to lie to you that we have a small government, but you'll pay for it in the future because we are simply making sure that in 4 years, you'll pay for it. The reason that's an important point to make, it's not a polemic. The reason it's an important point to make is that the Kenyan constitution requires that the government of Kenya pays all its debt first. So there's something called non-discretionary spending, and non-discretionary spending is defined by the constitution as the debts that have to be paid for, or rather the things that have to be paid for in what is called the consolidated fund. And what are those? One, public debt, which is the biggest part, pensions of retired public service workers, the salaries of constitutional office holders, judges, presidency, all those. And the final part is basically Kenya's subscriptions to international organizations. If you look at it, public debt is 90% of the total of that. So basically the consolidated fund in Kenya is public debt, and it's a fast charge. So what that means is if for instance, this year government of Kenya collects, this is a thought experiment. So if for instance, the government of Kenya this year is expected to pay 1.17 trillion in debt servicing. If it only collects 1.2, the constitution demands that the debts be paid. And if we can't pay teachers and nurses, so be it. That's non-discretionary spending, because the other part of the other part of public spending has been spoken for, because it's a constitutional command for the country to retain its fiscal solvency by paying back its debts. So I think that the crowding out effect, we've spoken about it. We've spoken about its effects on capital formation and new businesses, on employment. And in Kenya, I'm not saying that it's always true, but the kind of public debt mechanisms that Kenyans see actually redistribute income from poorer people. Or rather, it drives income inequality by taxing labor, and obviously those who own capital, and especially those who have banks and financial institutions that are able to benefit from trading public debt, then receive quite a bit of money from it. So as I conclude, in our view, the public debt management in Kenya is the most acute question today. There are measures of debt sustainability. One of them is, as I said, the risks is external debt has a risk of financial, or rather has a risk of currency. So if a currency fluctuates against Kenya, then obviously, of course, if the reverse happens as well, it means that you pay less. But over the last, I think 6 or 7 years, maybe slightly less, all the currencies of East African countries have depreciated. And Kenya's is very interesting because it stayed quite strong, all factors considered. We are not sure whether it's strong on the basis of market fundamentals. We at the IEA think it is not, but other people think that it is actually that strong. I don't think so, because if you look at Kenya's exports have not been so strong. They've not been bad, but they've not been so strong. So what happens is basic economics tells you that there needs to be some depreciation of the currency, which is not necessarily a bad thing. But we think the Kenyan currency is far too strong. Maybe there's policy decision has been made to keep it stronger, which is a waste of dollars. We have also said that domestic debt quantum crowds out public investment, private investment in Kenya, and we've seen the government is taking 34% of all money lent. That shouldn't be a good thing. It's showing that you're actually crowding out other businesses, including for youth who might want to form new businesses. The reason a bank won't lend to you at 12% is, why should it lend to you at 12% when it has to follow you with a call every day and send you a notice, when all it can do is keep one account and collect 1 billion shillings from government at the end of the year? It's just basically the costs. But the foreign debt component has lower interest. Yes, that's one other thing that I need to mention. The foreign debt component tends to have lower interest. The lower interest is that, so most of our foreign debt component, as I told you, is about, in terms of tenure, is about 20 years, some as much as 30 years. So they're big, they're long-term debt. And the good thing is that even if the amount does not change, but it's easier to pay, because if you're that same guy I was talking to you when I started, I'll be closing in a bit, that same guy I was talking to you as I started, if you owe somebody 1,000 shillings and you're supposed to pay in 10 seconds, and if you owe 1,000 shillings and you're supposed to pay in a day, right? You know who sweats less, right? Because you have the possibility of activating your networks, the possibility of finding it. So Foreign debt has its own risks. The risk is actually the financial risk of depreciation based on how exports perform and obviously how the Kenyan economy performs. Domestic debt, so the average foreign debt interest rate is less than 4%. The domestic debt interest rate is actually closer to 10. So the intention I needed to let you know is that debt sustainability in Kenya is dependent on many other factors. And perhaps when we spoke about debt sustainability, we should speak about domestic debt sustainability and external debt sustainability. So if there's a global shock in terms of a trade shock, or if there's a trade shock or a currency shock, definitely it would affect the the external debt component. If however, domestic debt is also very dangerous for two reasons. For one reason, which is political. With a strong parliament, it wouldn't happen. But we know in the neighborhood in which we live, in countries around us, governments print money. And when you're printing money, what it does, it actually erodes savings. And they can print money to pay domestic debt, which means they simply deflate the debt because inflation actually affects that debt. So it introduces very difficult, or rather very interesting political options that might be available for a government that is reaching the effect, the zenith of that. So it requires actors such as yourselves and people in the accountability space. One, for the right messaging. Two, to ensure that the questions of justice around public debt are brought to the fore, and that debt sustainability, in my view, is not just a question of what the law requires, but it's also a social justice question. Thank you very much.
Wow.
You know, I'm glad we're getting to the question answer session because I hope I got this right. We have to pay 20 billion shillings every 2 weeks to manage our debt portfolio. I get it. Borrowing is not bad as a statement made by clever people. High taxes are good. Well, if you say borrowing is not bad, responsibility is that everyone should pay his way. So the future generation, as we constantly talk about, they also have the opportunity to choose how it's going to be in the future. Now, ladies and gentlemen, time for your questions. And to guide us through that discussion, the discussion on how increasing debt levels affect service delivery. To guide us through that discussion, please put your hands together for the gentleman who was here yesterday, did a remarkable work. Put your hands together for Jason Braganza. Jason Braganza is going to guide us through that panel discussion on how increasing debt levels affects service delivery. Of course, the first panelist is already there. The rest will be called shortly. Big round of applause, Jason Braganza.
Great. Thank you. Good morning once again. Thanks, Kwame, for that fantastic presentation and a very nice scene setter for the next few minutes to have a discussion. I'd like to invite up to the stage, please, Ms. Wanjiru Gikonyo, who is the Executive Director at the Institute for Social Accountability, to please join me. And you can give her a round of applause as she comes up. And I'd also like to invite Mr. Livingstone Bumbe, who is the Senior Economist in the Public Debt Management Office at the National Treasury. Please give them a round of applause. Wonderful, great. Thank you all very much. And I just want to appreciate again Kwame's presentation. It's always an eye-opener listening to you, whether it's on public debt, tax, or other economic issues affecting the country. And I think the way I'd like to take this conversation is to build up on different points that you mentioned, particularly on what constitutes public debt, the effects, but also to appreciate to some extent that Kenya does not operate in a vacuum. We are part of a global financial architecture, more specifically a global debt architecture, and hopefully some of the things and the discussions around the debt crisis that many African countries are facing, Kenya included, potentially can also be addressed. And the second aspect that I'd like us to explore is the polemic that borrowing is not bad. Perhaps, you know, we may maybe get Wanjiru to explore some of that in some of the constructs in which debt is borrowed and for what purposes it is used, and see if we can debunk that polemic about whether borrowing is bad or not bad, and whether high taxes are good in that sense. And so without much ado, I want to start off with bringing in Mr. Bombe, and on some of the statistics that Kwame quoted to us from the Treasury, National Treasury's point of view, and how the public outcry in recent weeks and months about the borrowing to sort of, particularly to find our way out of this global pandemic, the COVID-19 impacts. How does that balance out with the government's ambitions to sustainably get us out of this problem without overcommitting taxpayers' money at this point in time?
Okay, thank you, Branganza. First of all, for the sake of the students, I'd like to let you know how public debt is defined. Actually, debt is normally defined by residency. So the residents who own debt within that economy, that is domestic debt. And the residents who own the debt without that economy, that is external debt. So we can have domestic debt in a foreign currency, but because the owners belong to that economy. Having said so, on the issue of, I'd like to debunk on the issue of the domestic debt and the external debt, and Kwame was correct when saying that the animal in the house is actually the domestic debt. And as government, as the PDMO, we have actually taken a deliberate effort to ensure that we check on that. And actually the average rate to maturity on domestic debt, we have shifted it from 4 years to 8.5 years. And we are working very hard also to reduce the stock of treasury bills. And for the sake of the students here, treasury bills is a cash management instrument. It's not a financing instrument. A financing instrument in the domestic market is the treasury bond. Yeah, the treasury bills is just a cash management instrument. You borrow to, that's why it matures within 1 year. And currently on our borrowing schedule, we are commanding 82%, 81% on bonds. On bills is only 19%. So we are trying to shift that curve. On the issue of debt going forward, and I liked what Kwame said, and debt is a product of deficit financing. Yeah. And in this conversation now, the biggest issue now is, do we treat the symptoms or do we treat the disease? And that's where I beg to differ with the first presenter. From where I sit, from where PDMO sits, not Treasury, PDMO now, debt is not a problem. The problem is the expenditure side. Once you create that deficit, the more the deficit widens, the more the borrowing will be. And that is why we are now doing what is called fiscal consolidation, where we are trying to see how the expenditures can be contained in such a way they do not impact on borrowing. And as we are sitting here, I think we are the technical department within Treasury are crafting the budget policy statement, and the deficit the next fiscal year will be lower than the current fiscal year. And that's why we're trying to consolidate and ensure that we are trying to check on the excessive borrowing. And on the other side, I'd also like to commend KRA. They're actually really improving on tax collection. And that's one area. If taxes are not collected promptly, or what has been budgeted for, what has been projected, then the revenues are not realized. That's why you hear this other word called supplementary budgets. And you can't hear supplementary budget that goes on or downward trends, it goes up. So the main issue now here is on the DSSI, where we actually got some debt relief up to December. It was quite a relief that the relief that we obtained from it moved to other essential services providers, like procuring medicine, the vaccines for COVID. But again, we are going to resume to start servicing those debts in January. But some will just have the pressure won't have been much more than the current one without the DSSI. Again, on the relation with our development partners, like the World Bank, we have this program called Development Policy, the DPO, where now it's a performance-based disbursement, where you have to justify that a particular project has been undertaken and its impact. And that's when a disbursement comes in. Without that, there's no disbursement. So those are the areas of financing that we are trying to see that can impact positively on service delivery. Thank you.
Thank you very much, Mr. Bumbe. And we've had some very interesting comments coming out from your side. Some of them alarm me, particularly because of the last comments that Kwame made around debt also being a social justice issue. And for those in the room who are not familiar with what DSSI stands for, it stands for the Debt Service Suspension Initiative, which was introduced last year to support countries that are highly indebted to suspend the amount of debt servicing due to the impacts of COVID-19. It was extended to the end of this year, but is likely to expire. There are some countries that are calling for a further extension. So that's what the DSSI stands for in terms. And what it essentially did was create what the economists will call fiscal space, or some fiscal room to reallocate finances to buffer the government's balance sheet to address the impacts of COVID-19 in particular, but there were more general aspects. Wanjiru, you and I have talked about this crazy term called fiscal consolidation. And when Mr. Bumbe says fiscal consolidation, the immediate line that draws immediately is to that taxes are good and potentially social services or public services are likely to take a hit. And I think that's a very nice segue to this other polemic that Kwame talked about, that borrowing is, if somebody says borrowing is not bad or it's okay to borrow. In the context of Kenya, where the borrowing has been questionable to some extent, How do we connect the dots between what Mr. Bumbe has said, that we are approaching this period of fiscal consolidation, but at the same time, we're saying, the rhetoric from the government has been that borrowing is not bad. How do we reconcile those two things?
Thank you so much, Jason. And I'm always very careful when I talk about debt, especially talking after Kwame and talking after economics and debt experts, because we have gotten into the debt conversation from a different perspective. We got into the debt conversation because I'm with the Institute for Social Accountability. We champion devolved governance, and I know counties have a very bad name because they are very corrupt and have in their own way contributed to the present problem because of lack of accountability under own source revenue. But our fundamental position is that we need to support service delivery at devolved level to grow. And we've seen the benefits of actually devolution, despite corruption, despite really poor governance. We've seen the numbers tell us that devolution is working. But we then realized that there's a problem because, as Kwame said, the first charge on the consolidated fund is public debt. And through what is termed in the Constitution as national interest, where the national government is able to prioritize projects that they deem to be of importance to the country, government was then able to hold on to a lot of money that should have been going to support agriculture, to support healthcare, to really the sectors that employ majority of people. And these national interest projects we found were then, presidential flagship projects. Some of them, there's the Big Four agenda, projects that didn't have proper feasibility study. And so a lot of money was going into this, and this happened to be borrowed money. So is borrowing bad? Our position as a coalition, as a campaign, the Okoa Uchumi campaign, we say, no, borrowing isn't bad if it is done prudently. If it is invested in projects that will give returns, if it is invested in projects that create jobs, if it is borrowed on competitive terms, if it is managed transparently and accountably. And that is why borrowing in Kenya has gone so horribly wrong, because all those requirements were not met. There's a big lacuna under borrowing, including when we look at the Public Debt Management Office, it does not operate in the anticipated way, because it's supposed to have the autonomy and authority to be able to make recommendations around debt. Right now, debt decisions are being made politically. So the statement during the recap, I think one of the main issues that was brought out is that this is a political problem. So I don't think borrowing is bad. Our position is borrowing is not bad, but the politics is bad, and the political decisions made around borrowing have been bad. And let me just emphasize where the challenge is and try and build, however, try and build on what Kwame said. Our position, because we commissioned a study to look at the fiscal consolidation program. We were looking at debt. Of course, there's a crisis. We can see that services aren't getting paid. We can see salaries are getting late. We can see, remittances to counties aren't happening. And we wanted to understand properly what's happening. So we thought, let's review the fiscal consolidation program. And what came out is that we not only have a debt problem, we've got an economic problem. So our debt problem has grown into a full-blown economic crisis. Why? Because the policies that inform the debt are the wrong ones. So the priorities in terms of where the money is being put, those are wrong priorities. SGR, these kind of investments that are very expensive, but then don't have the returns. We also looked at the monetary policy. And as Kwame said, when you fix the exchange rate, and the CBK governor is on record saying they are not managing the exchange rate, and I think Kwame said that, but the indications are that they are. Now, the fixing of the exchange rate since 2016 has resulted in a loss of competitiveness. So Kenya has become less competitive in the regional market. This means that we are not then earning the foreign exchange that we need to be able to even pay off the debt that we have, but also to grow the economy. And you've seen various reports going around that Kenya is deindustrializing, investments are falling. Then you link that to also the fiscal policies, the budget policies, the expenditure and revenue policies. Those are also not working. And again, Kwame has talked about that when you're squeezing out the business environment. So you've got falling jobs. You then have high taxation. And the problem is government is trying to tax its way out of a debt problem instead of dealing with the fundamental cause of the problem. And so our studies find that Kenya has reached the tax threshold. We've been taxed to the limit. We'd rather deal with the issues such as what we're dealing with today, which is what are the leakages in the present tax system. So there are some taxes we feel that should be repealed and instead work with closing these loopholes. Linked to this problem, and what I'm trying to say is, as for us, we are saying this debt crisis has grown into a fully blown economic crisis because there are already structural problems in Kenya's economic system. One of them being agriculture, for instance, that has very low productivity, employs a lot of people, but then very low productivity. And these are issues that government should be focusing on. So when you couple this, poor economic policy choices, with the poor macroeconomic choices, poor fiscal policy choices, structural problems, and then link them to poor governance, where we are saying Treasury has too much say. Treasury is not actually complying with the PFM requirements, which is to ensure prudent utilization of resources. They are more concerned with doing the executive's bidding. You have a PDMO that's disempowered. You have a parliament, unfortunately, that's been pocketed by the executive that has failed in oversight. You lack the public participation. You've got corruption. Now, that is the problem we're dealing with. And so as Okoa Uchumi, we are saying that we need to deal with the root causes. We need to come together as stakeholders. We need public participation. We need to address the issue of failed oversight, and it's not going to be easy. I'll stop there because I've talked a lot. I won't get into the fiscal consolidation program. Suffice to say, it needs to have stakeholder engagement. Right now, it's a kind of private conversation between Treasury and the IMF. And decisions are being made there, for instance, on university, the issue of restructuring universities, reducing the financing to universities that sees university students not able to, afford access to public tertiary education. So we need public participation, we need accountability, we need effective oversight.
Great. Thank you very much, Wanjiru. And I think I want to pick up on a couple of points because, and as I come to you, Kwame, because you also did mention them in your presentation, and you have talked about this previously around the economic structure in Kenya in terms of how productive resources are allocated and the investments therein. And do you really think in your opinion, because you also talked about how the current situation diverts capital, resources from labor to capital. Do you actually think, in your opinion, that the structure of Kenya's economy is actually a major contributing factor to the current crisis that we're facing as a country? And sort of the point A, if you like, to that question is there really a crisis in Kenya? Is there a debt crisis in Kenya? Because the rhetoric is that we're okay. Certain powers have been heard quoted saying Japan have GDP ratios, debt to GDP ratios of 200 to 300%. What is wrong if Kenya's only gets to 70? I personally have constatations about that, but I would like to get your perspective on that. Thanks.
Okay, let's start with comparisons about debt to GDP are one thing, but it doesn't tell you much if you talk about the tenure of the debt. So Japanese debt tenure is several generations old. As you can tell, we've just been told that yes, government is actually trying to manage to stretch the tenure of domestic debt, and obviously also to try and reduce volatility in external debt. So let me tell you, for instance, and I checked that this morning, not because I anticipated that it would come, but it's something I look at. So in this year, Japan's budgets, the but Japan's calendar year is usually from March to, from April to March. And so they release data. So for the fact that Japan has actually 126% debt to GDP today, the debt servicing costs today mean that for every 100 yen that Japan collects, it's only paying 11.50. For every 100, it's only paying 11.5% in debt servicing. So the 10-year question helped it. That's the first one. The second, Japan's debt is entirely denominated in the yen. So it's domestic in a sense. I mean, in the sense that, or the currency of payment is their own because there's the convertibility, which is something they have the ability to pay for. And Japan has a bond, I think issued last year or something, for I think 51 years or thereabouts, half a generation of the bond, which means they can stretch then income. I mean, they can stretch the size of the bond over time. The interest rate in Japan today is 1.7%, 1.7, actually 1.67. So if you look at those terms, and then you ask yourself, so on the interest rate in Kenya, the average interest rate in Kenya for all debt is actually closer to 6%, 7%, which means it doubles every 10 years. It doubles every 10 years, right? Because of the compounding effect. So that's one. Japan's would double in closer to about 56. So if we borrow the same amount of money on the same terms as Japan is borrowing and Kenya is, right? It means Kenya will pay for the same amount in net present value terms 5 times more than Japan is paying. So that comparison is the cleverness again. And to be honest, I haven't heard it from the debt management office, but I hear it from politicians. So I don't know that they are saying that because they don't understand, or I don't know that they are saying that because they expect us not to call them out. And at the IEA, our work is not to debate with politicians, but it's to call out economic fallacy. And that's a big economic fallacy in Kenya. We have a debt problem. Let me give you an example. So for instance, I mean, this is in the public domain. So for instance, right in 2018, after the Tano-Tena elections, thank God the elections, well, at least it was resolved, members of parliament for the first time were queued. You know, members of parliament are entitled to a car grant. I think it's wrong. Actually, somebody should challenge that constitutionally, right? They were queuing in the sense that they were getting it in batches of 25 or some amount. It couldn't be paid all at once, which is the first time it happened. So that's one. Their grants for their mortgage payments as well were being queued in the sense that, it's as if you have a SACCO, but your loan or advance applications are actually being queued. So you send it today and then it has to come over time. So that kind of queuing. Those are all signals of a cash crunch. So there are things. If you look at it this year, the president in the last 3 years, actually, I think the last 3 years or 2 years, has had to give press statements in which he's saying, I am ordering counties. I don't know that he has passed to order counties to pay their debts, but I'm also making sure that the Treasury Cabinet Secretary for the Treasury will pay what? Pending bills. Some of those pending bills are 4 years old. In other words, somebody supplied services in 2017, and they're being ordered to pay for it today. All those suggest there's something in not just the cash management, but the amount of money that's coming. And last year, we had a supplementary budget, right? Into the new financial year for the previous year. So all this suggests to you that the state of government finances in both the short and medium term are not in good shape. So we can have a polemical debate about whether we have a problem or not and compare ourselves to Japan. But the cabinet secretary in Japan does not sweat if there's a currency fluctuation. I am sure the cabinet secretary in Kenya and the central bank governor do sweat if that happens, unless they're on some other stuff, right? That makes them sleep very soundly. Thank you.
Thank you very much. Mr. Bumbe, I want to pick up on this question or this issue about the currency denomination. And this is not just a Kenya issue. I mean, it's a developing country issue. And some of the work we do at Afrodad is about understanding what are the components or what are the factors that countries like Kenya or on the continent need to take into account or have with them when they are negotiating, particularly with international borrowers. As Kwame said, that's where the main, where the currency denomination issue comes in. What are those things the debt management office or the treasury or whoever does the negotiating for foreign debt need to have in place for us to go and say, actually, China or IMF or any other international financial institution, that we want our currency, our external debt to be denominated in this way? What are those things that government needs to be thinking about? And maybe those in the audience and following online would like to know to avoid these exchange rate fluctuations that may give the CS and central bank governor sleepless nights.
Okay. First of all, we have an existing stock of external debt. We look at how it is the composition, how it is structured in percentage of currencies involved, and you can do a sensitivity analysis and shock it and see the effects it will have on the Kenyan currency if in the event there was a shock. We also look at our export earnings. Mainly of our export earnings are in the US dollars. So you can't come in and check and say that you want an Indian rupee. You cannot get an Indian rupee loan from a country from Europe. That also dictates where they're coming from. But we do advise if there is a position that, especially on bilateral terms, it's quite difficult to dictate the currency on bilateral terms. But on multilateral lending, you can have a basket of currencies that favors you. On most of the audience here have heard of Eurobond. They might think that it comes in euro. It doesn't come in euro. It's in dollars. But plans are there that in the event we want to do another bond, we'll avoid the US currency. So the things you look at is the existing stock. How is it structured? The effects in case of a shock, how will you feel it? And we normally advise our in the PDMO. I come from a department called Debt Policy Strategy and Risk Management. So we normally advise resource mobilization department on first on the terms to negotiate the interest rates applicable. We also advise them on the tenors to negotiate. We also advise them on debts, to pick debts when we are going to repay the debts. We look at our repayment profile and see where there is a big hump, we avoid that. So those are the things that we normally advise on.
Thank you very much. I wanted to just stick with you a little bit. There was a point that Njuru made here about the power and the capacity of the Public Debt Management Office. In your opinion, this may be an unofficial response or an official one, but do you think really there is scope and space within the way debt management is done in Kenya for there to be more autonomy for your office to do more research, more analysis, more scenario planning, away from the influences of power, should I say, in order to then give a proper and true reflection to the public around how the debt situation in Kenya looks like. And I'm asking this in context only because of two things that you had mentioned. One is the fiscal consolidation that we're going to start undergoing or may have already started undergoing. But secondly, it's with regard to the theme of this session around how social services are likely to be impacted, not only because of the cash crunch that Kwame has referred to, but also because of this fiscal consolidation program that we're. Is there scope for your office to have that space, to do that kind of scenario planning and saying, you know, if we have runaway borrowing and that's not kept in check, then this is likely to be the social impact on service delivery in the country. Is that something that you know students in this room can start considering or thinking about?
I'll start on the last issue. Yeah, there is scope, and for example, in this fiscal year, there is a borrowing which will do, but it won't be a borrowing to finance any project, but it will be a borrowing for debt management operations, to see how we can restructure the existing debt portfolio and wipe out expensive debts from our books. That one is in place. On the issue of the independency of the office, you might be well aware by when the PFM was crafted, the DMO was the last negotiated piece, and the idea was to remove it out of treasury. But in the wisdom of those who were there, they felt that it should be within the treasury. It has its own benefits and other difficulties. We have a bill in Parliament, I don't know if you are aware of it, to remove the office from the National Treasury, but it has gone silent. I don't know what's happening. Yeah, it has not been given the promise that the people who are talking about debt is bad, they don't talk about that bill.
Thank you very much for that candid response. And then I think that I want to, you know, this is coming back at you here on the social services. I mean, we are in a state of dealing with a global pandemic, accelerated economic crisis or debt crisis as a result of that. You know, Kwame and many others had been warning that this cliff edge was approaching, and what COVID-19 has done is just to get us there a lot faster than we would have liked. We're entering a very complicated fiscal year, or at least we're in a very complicated fiscal year. How do you see the conversation evolving now, given the debt commitments, both domestically and externally, that the government has accrued over the past many years, at a time when, you know, the cash crunch is there, but the ever-growing need for social services, for public services, whether at the national level or at the county level? How do we start bringing that conversation to be one that is a political hot potato, because then, you know, the elected officials have to make that part of their discussions and part of their pledges, but also not just a topic of conversation, but actually a topic for delivery, given the very massive groundswell of inequality that we're going to see, the regression in a lot of the social development indicators that we have seen over the past decade or so. How do we bring those two things together?
Yes. Yeah, I think that's what we're grappling with as well. How do we take, actually the question we ask ourselves is, or from where we sit, Kenyans are aware things aren't right. All the national surveys that have been done, in fact, since last year, maybe even the year before, Kenyans are aware we have a debt problem. And Kenyans are aware that it's possibly because of bad politics, poor governance. So there's an awareness. The question is, how do we turn that awareness into political action? especially as we go into the elections period. Especially as politicians are very astute. In fact, we were on a conversation yesterday evening saying politicians read the signs and everyone's talking economy. This is the big agenda. Bottom up is one of the big kind of political rallying calls of one of the parties. Now, bottom up is one of our big rallying calls. So you look at this political outfit saying bottom up and you say, they're talking about something that is really, really important, but then they do it in a very political way. So our challenge as civil society is how do we ensure our language isn't appropriated and our agenda then not implemented, because that's what happened with the discussion on corruption. Politicians picked the language. NAC 2203, it was all about zero tolerance to corruption. Pass a whole battery of laws. We have certain elaborate anti-corruption architecture, but we didn't deal well. There was some small gains during the Kibaki administration. As civil society, we were very unhappy because the big promises weren't kept. There was increased efficiency in the way government was running, but still many of the big ticket items on corruption were not addressed. So how do we avoid our agenda being hijacked? How do we get citizens to be active? And my thinking is we need to build a culture of activism. Because as Kenyans, we engage on Twitter, we discuss, we have, we track political activity, but it doesn't translate into what Osedo was asking, who has submitted a petition? You're unhappy, you're affected, have you done something? We have to get rid of the tendency. The relationship between citizens and their politicians is a very unhealthy dependency, a codependency, where we don't like them and we know they're bad for us, but we still want them to give a job to my brother. We still want the CDF contract. So there's a lot that's not working, and that's, our challenge as civil society is what do we do? In my thinking, some of the things that we need to do is to push for an open discussion around the decisions that are being made on our behalf around the resolution of debt. It is unconscionable that we've gone into a fiscal consolidation program without public participation. That decisions are being made on where government will cut, where government will spend, and these decisions aren't subject to public participation. It's unconscionable that we've gone into a fiscal consolidation program on possibly faulty premises and faulty or misrepresentations in the amount of debt, impacts of debt, that this whole process is being managed. So our fiscal consolidation program, because I'll call it ours, it's the country's, has also been hijacked. And it's been hijacked by political interests. And the case in point is, has the fiscal consolidation program resulted in more resources going towards COVID recovery? This is one of the big, it's the first priority of the program. The answer is no, it hasn't. In political speak, it has, but in actual numbers, it hasn't. So government is actually cutting money for COVID recovery, but saying they're increasing it. Has the fiscal consolidation program resulted in more money going into health, into agriculture? The speak is yes, that we're going to support services, but in reality, those budgets are being cut. What actually did happen, and it was a decision that was announced by the CS during the budget policy statement making early in the year, is they decided they are going to fast track the high impact Big Four agenda projects. Now, these are not high impact, it's not proven anywhere. In fact, there are white elephants in those presidential flagships. There are audit queries in some of those. Some of those priorities are very pertinent, but their implementation model has been questioned, such as the UHC. Very important to have universal healthcare, but there are a whole lot of things that need to be sorted out. But they then said we're going to increase the allocation. And where did the increased allocations go? To energy and transport projects. And then maneuvering was done where even the management of that money was put under treasury. So there's a very, and Dr. Edward Ouko told us Budgetary corruption is worked into the budget. Said, look, the problem we're having is we have a very strong constitution, and we have strong oversight, strong oversight mechanisms in law. So what this administration figured out under this dispensation is you factor it into the plans. And at prioritization, we do not have robust conversation. We do not have good oversight. So our biggest challenge to us as we sit here and have this very important conversation and, really congratulate the civil society actors who have put this together, is we need to open up these spaces. We need to use evidence, the strong evidence that's being generated, and put it into the political arena. And we have to spur citizens to civic action and to activism, because the transformation we've been yearning for has not yet come. We are getting the laws, we are getting the discussion, but the political culture is still the same problem that we've been dealing with.
Thanks, Funju. I think that's a very nice segue also to bring in Kwame before I open it up to the audience. Kwame, a couple of points here, both building up from what Mr. Bumbe has said and what Wanjiru has talked about. The first one is around cost of borrowing. And it sort of links to the crowding out effect in terms of what international borrowing does to your ability to borrow domestically. First question is, in your opinion, why is it so expensive to borrow domestically? And is there a way that governments like Kenya or regional blocks like the EAC, ECOWAS, SADC, or even the AU, the AU, under their plans to set up a monetary union, is there a way that African governments can find alternative, cheaper ways to borrow? And here it's not to defend the point around borrowing is okay. It's more to ask, there is a level of inevitability that governments are going to borrow in the current models that we have for development. And in so doing, is there the opportunity to find cheaper ways of borrowing domestically as opposed to internationally? And sort of linked to that is, how then do we mitigate then the governance issues that Wanjiru has talked about in terms of the budgeted corruption, for example, that comes in, which then is a contributing factor to the cost of borrowing and also to the need to then actually borrow?
All right. For the first question about there are ways to reduce borrowing costs at both international and also at domestic levels. About it nationally, I think great competition between people who want to lend government money, one way of actually making sure that you get the best sources. You get the best interest rates that you can and the best terms that can happen. Has it been done somewhere else? Yes, it's been done by other countries. Maybe Kenya could consider it. However, Kenya is a small country. The amount of money that might be available at hand might not be so high, but nevertheless, there is scope to actually make sure that there's more. At the domestic level, certainly. And if you think about it at the domestic level, part of it is some things that even government tried and some things that could be tried as well. But it's very, very clear to me that there are dominant banks in Kenya. And it's also very clear to me, and I say this, I have to be circumspect, I say this, I don't think that the auction mechanism that the government of Kenya uses to get domestic loans is entirely competitive. I actually think that it is possible that some banks or financial houses may collude to actually make sure that the interest rates are higher than they would be if it was entirely competitive, anonymous, and the instruments were provided. That's one. The second part is government needs to explore retail borrowing. And if you remember, one of the things that I remember for C.S. Rotich, he introduced the concept of, at a budget speech of Emma Kiba, right, which is supposed to be the equivalent of Kenyans buying through a mobile application, an M-Pesa payment, lending money directly to government without the intercession of banks and financial houses. They were opposed to it. And I wish Kenyans saw that opportunity, because there are many banks in this country who rely substantially. And I'm not saying it's their fault. I mean, if the government is borrowing, they will provide that risk-free instrument. But if you could open it to more competition by Kenyans who have savings, for which banks are giving you 3%, and if you can put your 300,000 shillings by buying a government bond directly, I'm not talking about through the bank, because in that way they still get directly. That Emma Kiba thing is something that should have been explored. My view is that it was a loss to the public. So people who have an odd 10, 15,000 shillings to actually buy public debt and earn 6% as opposed to the 2% that you're earning, as they're taking 11% from government, that possibility of arbitrage exists. That market can be made. And maybe the only guys who can do it for us is Parliament to insist that that facility be brought to the fore. But I think banks and a few people who actually cover that market saw its potential very clearly. And I saw interviews in which there were misstatements about what the intention of the Treasury was. And I wondered why the Treasury didn't push back. But the public would have been, because if you had an odd 5,000 shillings, or if you have your own chamas, you don't have to buy it to a bank. You simply do an M-Pesa, send it directly, and government will be able to appropriate that money in the same way that M-Pesa operates today. There'll be a facility that allows government to appropriate that money. All those matrix savings, I think we are there, would have found a way, and they'd be competing as a way, because I've never traded bonds, but I can tell that the bond market in Kenya is not the most efficient. It could be, especially for a government that is buying $200 million every 2 weeks. Thanks.
Thank you very much. I want to open it up to the floor. So we have one there, one here, and okay. So how do you start? Let's start with the two gentlemen up there, and we'll come to you, sir, and then we'll finish up there. And if you could just again, just briefly, if you have a question, not a comment, and just say who you're directing it to, that would be great. Thank you.
Hello, my name is Muteti, and I want to ask a question generally to, because Shiro mentioned it a bit, on the role of Parliament in terms of controlling the debt. And, you know, most of the time we bastardize the members of Parliament for doing what the executive says. But if you look at our structure of governance, we are a democratic society whereby we operate under political party systems. So this means that the members in the Parliament, most of them are the majority from the party that won the elections. So most of the time we will bastardize them, whereas it is party discipline. According to political science, it is regarded as party discipline to do as what your party leader is saying. That is the president. Like, let's say, for instance, now the Jubilee Party. That's why you see when there were some issues in Kenya, the members who were not going as what the party leader was saying, they were removed from the party and they replaced that leadership. It's party discipline to do as what the executive is saying, who is the man who is guiding the vision and the ideology of that party. So perhaps, I don't know, but it is, I think we are bastardizing them, whereas it is discipline for them to do as what you know, the executive is saying. On the flip side, I think perhaps we should now shift gears in terms of working together with, you know, political parties, bringing them on board in these conversations, all right? Like, for instance, when they're designing their manifestos, when they're designing their policies, when they're designing their programs, they always work at a certain agenda. A winning party has a certain agenda. So I think perhaps this conversation should be more inclusive to them. I'm just trying to broaden that conversation because it was just hinted upon, and it appeared as if we are bastardizing the members of Parliament. So yeah, thank you. I think the political scientists in the room can support me with that.
Okay, thank you. The gentleman there, please.
Thank you very much. I'm Evans Juma. I was on record yesterday saying that debt is not bad. And therefore, today there has been a rebuttal to that statement. And it goes directly to Kwame. The Constitution of Kenya and public finance management laws specifies debt and borrowing strategies, and it is embedded there. Are you entirely saying we should have a review of the Constitution so that we don't have debt? And if we were to hire you to fix Kenya today, how would you advise Kenya? Because we have dwindling revenues and then increasing expenditure needs, occasioning deficits. Where will we get money to deal with the deficits that we have? Because grants is now and goes on because they are introducing conditionalities akin to what we had in the special adjustment programs. So we will not be getting so much of that coming. So maybe your comment on that.
Thank you. And I think we have Arcadius. Sorry, no, there's a gentleman here, and then Arcadius. And then we'd also like the women to participate as well, please. I made this plea yesterday, so please also the women in the house, please do ask your questions. Don't feel shy.
Yes, my name is Kevin Asira from Multimedia University. My question is for Ms. Wanjiru. She has said that debt decisions are being made politically and that the government is borrowing to invest in irrelevant projects. So do you mean to say that the government is busy killing the future of this country, or has it already killed it?
Nice, easy questions. It's a good thing we live in a democracy.
Okay. My name is Arcadius. I'm a freelance journalist based here in Nairobi. My question I direct to Livingstone. I think Mr. Kwame has said very, very well. And I go with this statement. I don't like that one over borrowing is not bad, but it is. So in this borrowing, I will also understand which kind of collateral are you using in this borrowing, because we think we have overborrowed, and sometimes there was speculation that we are taking Kenya, we are taking some of our resources, our port as collateral. I don't know what is your take on that one. Are we going to Zimbabwean way very soon? And if not, what are you using as on that one borrowing? Because if you borrow and you fail to pay, the credit of the lender will not continue to keep on lending you money, but we keep on borrowing every day. We keep on borrowing. So I'd like to understand which basis are we borrowing on.
Yeah, a very nice, easy one to wrap up as well. So yeah, there's three questions. There's a comment and three questions, and yeah, I think there might be some online questions, and hopefully they can be read out at some point. So maybe we'll start with Mr. Bumbe on the collateral, because I guess this is also something that's of keen interest, given the experiences that we read about in the news happening elsewhere across the world. And then we'll come to Wanjiru on is the government killing us, given the kind of borrowing they're doing for the borrowing decisions that they're taking. And Kwame, your debate continues on the debt is not bad. So Mr. Bumbe first.
Yeah, Kenya is a sovereign, and once the cabinet secretary treasury, who is empowered by law to enter into an agreement with a lender, that is sufficient, and the lender will require a legal opinion from the Attorney General that the person who has appended his signature in that agreement is the one who is recognized by the law. So Kenyans are sovereign. We don't issue any collateral. The issues of collateral you are hearing here or there, there's nothing like that. the only collateral Kenya can issue is a form of a guarantee once it's a state-owned enterprise or a county government enters into an agreement with a lender, then the National Treasury, on behalf of the Kenyan government, signs a guarantee to the lender that if the lender does not pay, then the national government will come in and step in. So there's nothing like a property or a collateral. And by the way, that is why other forms of financing, we are having challenges like Sharia compliant financing. Like we have Sukuk bond, which are Islamic, and you know how Islamic financing operates is that I lend money, but we co-own the project. It has been difficult for us because on the legal status, so we can't. We are still grappling around on how to issue such a kind of an instrument because the law does not allow that. On the basis of borrowing, actually, we just don't walk up and borrow. Of course, we borrow to bridge the financing deficit, and before that borrowing is done, the borrowing is actually informed by a medium-term debt management strategy, which offers various financing options and strategies, and a mix also. If, for example, the deficit is 800 billion hypothetically, the strategy will look at the mix, which of the 800 goes external, which goes domestic, and by engaging into borrowing, it is enshrined in the PFM. We have to look at the cost and risk implication on that borrowing. Thank you.
Thank you very much, Wanjiru.
Together with the Okoa Mombasa Coalition, we're in court trying to get access to the SGR contract because we want to see what guarantees the government issued to the government of China, because of course there is speculation that it's the port of Mombasa and maybe even a few other assets. And there's speculation. In the absence of information, you speculate, and sometimes you're wrong, sometimes you might be right. There's speculation that the reorganizing of and under the present DPS, the reorganizing of key assets of the ports and the management of key infrastructure assets under Treasury is so that the government can assure China, should things go wrong, all these assets are being managed centrally, and so our guarantee is safe. So maybe explain what assets has the government used to secure loans, and how transparent is that process, and what are the risks? And then also on the medium-term debt strategy, when government goes to market, especially the commercial markets, we find the commercial markets do not have the safeguards of multilateral borrowing that comes with a lot of accountability conditionalities. And a lot of the misuse of public debt appears to be on the commercial borrowing. And we've seen government going to market, they are targeting to raise a certain amount. The issue is oversubscribed, and so they come out taking more money than they had initially planned. So how does that work in the debt management strategy? It seems that there's been a violation of the government's own targets of borrowing based on the availability of funds. So it makes us wonder, is there discipline in borrowing?
Again, on the issue of the collateral, the port of Mombasa, the first and the second container terminal, was built by a loan from the Japanese. And this whole and cry of Kenya giving the port of Mombasa as a collateral, it is the Japanese who constructed that money from the Japanese. The Japanese just kept quiet because they knew there's nothing like that. There's nothing like that. So the issue of the collateral is the signature the cabinet secretary, and the lender actually has to be assured by a legal opinion from the Attorney General that the person who has put his signature there is the one that is supposed to sign that agreement. We had to do some speculation when the former minister left. Lenders also came asking now, what is the procedure? And the procedure was that at the time the loan was signed, that was the Minister of Finance. On the debt strategy, especially on the Eurobond, we went out there. The paper was oversubscribed, but we took what we had gone through, because in the financial markets, credibility is the most important. You go and say that you're going to borrow 200 and you borrow 300, then your credibility is gone. So we actually stick to what has been, unless there is a supplementary budget that requires additional borrowing. We can't borrow more than what the deficit is requiring.
Okay, thanks. Do you want to just quickly come back on your question? And then I know there's some online questions and we have 3 minutes to wrap up. So
I'll try and be very quick. Is government killing our future? I'll put it in the context of where we are as a country, our path towards a democratic, accountable, inclusive country. We are on that journey. And in that journey, we've had different administrations who have either taken forward our cause or reversed our cause. And in my view, this administration has really reversed this cause in many ways. So because we have under the Constitution principles of debt management that require the burden of debt to be borne equitably, Kwame told us that's not happening. There's heavier taxation on the lower income than the higher income. So there's a lack of equality. Also, the burden should be borne equitably between the present and future generations. It's not. The burden is actually being pushed to future generations. So there has been violation of the principles that bind us together as a country. And that brings us back to the oversight questions. What do we do? Why has oversight broken down? And in our view, we need a multi-sectoral approach. Look a little bit at maybe the weaknesses in law. The Treasury is able to borrow once the budget ceiling is approved, the Treasury never has to go back to Parliament for approvals of loans. And the proposed bill, there's a proposed bill that is trying to ensure that all these facilities must be approved by Parliament, as happens in other countries. There's also been, on the oversight side, there are also other weaknesses. So apart from fixing the law, we need to look at the political culture. We need to look at the public participation. We need to enlighten and empower ourselves. So what I'm saying is, yes, we have had violations of our socio-economic rights. As citizens, we have a constitution that is in our favor. What are we doing to ensure that we elect good leaders and then hold them accountable when they enter that position? So I think the onus is on all of us because this problem has fallen upon all of us. We must elect good leaders and hold them to account.
Great, thank you, Kwame.
Okay, when I said that by saying that debt is bad, I did not mean for us to believe that it's good or not. I'm saying when somebody says that is bad, please let's ask them whether they understand that they are saying that future taxation is what they're calling for. It's an incomplete statement to say that debt is not bad and then go ahead to run a deficit of 400 billion every year. So that's my point. I also know that the Constitution has provisions for borrowing, which means it is anticipated that borrowing may take place. But look at it, debt has consequences so that last year, Kenya was so heavily indebted. There was very little fiscal space because the shock of COVID is one of the situations that justified huge lending in order to cushion people through public service delivery and stuff like that, right? Needed more nurses. If you remember, a couple of doctors died because the PPEs did not come on time. And it's not because there were no PPEs, it's because money couldn't be put forward in time before all that. So there are consequences to borrowing that we need to discuss. The more immediate ones for a taxpayer is that your taxes are going up. That's what the government is telling. That's what whoever is saying that is saying. I want to spend 1.2 trillion, but I'm only collecting 900 billion from you from taxes and deferring taxes into the future. And therefore justifying it by saying that is not bad. So it's an incomplete sentence, and that's what I mean. How to fix Kenya? Let me mention this because I receive such questions quite a lot. When we sit as the Institute of Economic Affairs, we are not saying that those who are doing the job are doing it badly, though sometimes they do in the public sector. And I'm also not saying that I want to replace them because I shouldn't. They have the jobs and they qualify for it. All we are saying is this. If we sit as dispassionate analysts and researchers, we identify these options that could make this society more prosperous and better. And please consider them for what we are. We are not suggesting that we are cleverer than other people, though I think are very clever people who work with me in the office. So one of the things that I do is this. In the present situation, the option that I put forward is this. Look, we have a deficit of 800, 900 billion. Why should we continue to run debt? I think the way for government to do it is actually to cap spending at this year's rate for the next 3 years to buy time for the economy to recover, for businesses to come back. And then that means that you're not expanding debt, but also, I mean, in real terms, but it also means you do not reduce public service delivery, which might generate a shock to the economy. So that's the first. The second is a controversial point. The government of Kenya sits on assets worth trillions of shillings. It should not be borrowing some of the small monies that it do. I know public assets in Kenya that if leveraged into the market, yes, I'm calling for privatization. Government should actually have a say of assets that are up there whose value is actually understated because government is not making good use of them. If they are placed in the market, I can tell you, no, that half of the public debt will be paid by privatization, government will lose nothing, except for public sector workers who want contracts in state corporations and who want to send people to receive jobs every now and again and want to sit in the boards of all of them. So privatization program must be part of the solution for debt resolution in Kenya. Thank you.
Great, thank you very much. I know there's some questions online. So Johnson, sorry.
Well, thank you so much. This is more of a comment from Irene Muita. She says, I agree with Wanjiru. Among the problems on public debt management is transparency and accountability on the use of public debt. Audit on projects funded by debt is key, but how best can the problem of spending stalled projects, let me take that again. Audit on projects funded by debt is key, but how best can the problem of pending or stalled projects be addressed? Especially mega projects funded by debt that end up stalling for years and finally ensuring value for money on debt-funded projects. Kenyans pay taxes to finance a number of issues, including debt, but the debt-funded projects do not benefit citizens. It is important to include citizens in such projects to effectively assess value for money. And finally here, a question, what next on Kenya's debt ceiling? We are soon approaching the 9 trillion cap.
Okay, great. I'm not going to apportion the questions, maybe volunteers, but I guess maybe the debt ceiling, Mr. Mume, that would be most appropriate for you in terms of the analysis the PDMO does. You know, is there fear that we're going to get there very quickly, especially with the additional 1 trillion estimate that Kwame put on the figure, you know, pushing it to about 8.4. Are we likely to see a call for that ceiling being pushed even higher? In response to the question, then we'll come around.
Okay. Of course, if if the deficit continues to widen, then there might be a challenge. But there have been a conversation. The Constitution has defined what public debt is. But what the PFM and the regulation has failed to define is now what is debt. Now that now comes into the idea of disbursed and undisbursed. That is now how the PFM and the regulation is open to many interpretations, of which if you look at the World Bank tables and how they define debt is actually what has come in and what is due. But the PFM and the regulation has not defined that. Yeah.
Thanks. And I think maybe when you're on the mega infrastructure, I know that's a pet project for you. So yeah, your thoughts on that?
Yes, first of all, on the issue of audit, the Auditor General is actually undertaking an audit of debt. And as the question was raised, I thought it would be important for us to write into the Auditor General office to find out what the audit entails, so that it's more comprehensive rather than superficial, because there are questions we want to ask. On the pending and stalled project under the fiscal consolidation program, and based on a review that the World Bank had done a year prior to that, there are over 500 stalled projects that still remain on the debt register and apparently are still resourced. I mean, Kenya has a lot of money, we waste a lot of it. And so obviously there are interests around these projects, and these are supposed to be removed of the budget so that they are not paid, they're supposed to be discontinued. This is a political question, whether this happens or not. So again, as stakeholders, we need to push to ensure this happens. But the last point that was raised in that same question was around the value for money, because some of the white elephants or the big presidential flagships are not on that list. And in our view, some of these projects are the problem. So again, that's political engagement. We need as citizens to enter into the discussion, make our voices heard, and push to ensure that when projects are being reviewed, they're all reviewed for their socioeconomic impact. Thank you.
Thanks, Madhura. Kwame, lastly, just to, as we wind up, this issue around productivity of debt finance, sort of linked to what Madhura and Mr. Mumba have just concluded. I mean, in your opinion, is there an alternative use for debt financing away from these big mega infrastructure projects or energy projects have a very long yielding return in terms of their tax revenue capabilities? Before we ever see the SGR making profits, we're still paying back those debts for maybe 15, 20, 30 years, similarly with the expressway. But could there be an argument, given we're talking about social services here, could there be an argument where you borrow and you borrow to invest in actually building a proper social welfare, social service system and architecture in Kenya, where citizens would be more willing to then say, I'm actually happy to forego the tax, but I can see level 5 hospitals dotted around the country, like I'm seeing 8-lane roads, or I'm happy to see universities all over the country, like I'm seeing stadiums. I mean, could you make the case for that as we wrap up? Mr. Bumi talked about. Yeah. Great. Ladies and gentlemen, thank you very much, Kwame, Wanjiru, and Livingston. Please just give them a round of applause for an amazing session, and to the participants online for your questions and comments. John.
Wow, big round of applause to Jason and the panelists. We celebrate you. Thank you so much indeed for your insight. Ladies and gentlemen, we've come to the end of the first session. We want to go for a quick break so that we come back. We have a quick one before lunch, then we will be back to close the conference. So in the meantime, we only have about 15 minutes. Wow. So I really need you to dash to the 5th floor, take your tea break. Let's be here 1/4 the hour so that we can keep and finish early. For those watching via Zoom, thank you so much indeed. We celebrate you, and we expect you to be here as well by 1/4 the hour. But thank you so much for being there, and thank you so much for your comments and questions as well. See you then. All the best.
I wanna wake up to the heat of the sun. I wanna feel it right inside me. Oh yeah. To the beat of the drum, I want my life to celebrate. Oh yeah. We together as one, we're all the same. Oh yeah, we're together as one, let's celebrate. Gonna stay and turn the night into day. We're gonna get the world a party. No matter where you're from, you're welcome to stay. We got enough for everybody. We're together as one, we're all the same. Oh yeah, 'cause together as one, let's celebrate. Let the world go.
where we begin to live. Systems must be stronger than conflicts. Public participation grow part or key pillar in policy. warming up. Let's say conversations. It's now going to be about action. Your remarks.
I'm happy to be here. And I think for me, one thing that I think has really stuck in my mind was I think I now understand what debt really means and what I can be able to do as a citizen, how I can be able to contribute in probably maybe creating awareness outside there and helping the government, I think maybe by also giving my views so that I can also be able to contribute and on how we can be able to make good use of this money that we are borrowing. Thank you.
All right, contribution there. Big round of applause for him. Thank you so much indeed. And by the way, we're still streaming, so this is a very key moment for you because after this, you can go on YouTube and Facebook and actually watch and listen to your comments. Go ahead.
My name is Duncan. I'm from KNCVIT. I think I have learned so much. There are so many things that have been ignorant. We have left it with politicians and maybe the people whom we think they are well informed. And we have been thinking like there is nothing that we can do. But from today, at least I know even as an individual, there is something that I can do. One, I will respect my vote. I'll not take it for granted because I know one step, one thing that it can do, at least I can choose a person whom I know is advocating for what I believe in. Another thing is that I'll be an activist. I'll be keen to inform other people, the community, of what this is all about. This is just the beginning. I want to believe we're going to learn more so that when you go out there, we shall be more informed than the way we are today. Thank you so much.
Wow. We need to rise above ignorance. We need to be at the very center of the discussion so that we can touch the people at the grassroots level. Thank you so much. Next on line, Makofi yake tafadhali, makofi yake tafadhali. Please come forward. You can actually just stand on that side. Okay. Is that good? Excellent. All right.
Hello, everyone. Yes, my name is Pamela Mgune. Yeah, naweza ongea Kiswahili.
Kabisa umekaribishwa na tuzungumzie.
Yeah, kwangu mimi nimefurahia kuwa mahali hapa, niko na furaha. Na chenye nitasema kuhusu election na nimepata kama mmeshaendelea, lakini nitasema kuvote ni uamuzi wako, ni uvote yule mtu ambaye unaelewa ni nani ambaye unavotia. Na chenye naweza sema, hata naweza pea wengine advice, unapovote jua unavote kwa nani, najua ya kwamba unavote huyo mtu atakusaidia kivipi. Yeah, nashukuru.
Asante sana. Big round of applause. Thank you so much. Asante. Karibu.
Good afternoon.
Good afternoon.
My name is Cesar Ashira from Paco Industry. I've realized in this meeting there is a need to borrow, but the question is, utamu wa deni ni kulipa.
Yeah.
So before they think about borrowing, they should think about how they pay back, and that will save us the hassle of a big debt. Thank you.
Hey, makofi tafadhali. Asante sana. Thank you so much. Next on line, you can kindly take your seat. It's okay. Once, yeah, it's all right.
My name is Omondi Noel, and I think from today's session I've learned that the solution, I mean, there's a problem already, but the solution is in our politics. So that our politicians, like Mr. Kwame said, the government is sitting on assets that will finance almost half of debt. But then, because guys want to sit in boards, people want to have contracts, people want to have tenders, and they are not open to privatization of debt assets.
Politics, privatization. Okay. Makofi yake tafadhali.
Hello, everyone. I'm Florence Maina, a student at the University of Nairobi. So what I've learned so far, we've all seen that the illicit financial flows are mainly caused by corruption. So we as the youth, we are the future of our generation. And in as much as we are fighting corruption, we should start where we are, use what we have and do what we can. So as we start where we are, even as we fight corruption, it is today, the time is now. As we use what we have been taught so much in these 2 days. So let us invest in that knowledge. And as we do what we can, it is our time to show a difference in the society. Thank you.
The time is now. The time is now. A big round of applause for her. Thank you so much. Just a moment. Let's check your mic there.
My name is Kelvin Asira from Multimedia University and also from the National Taxpayer Association. And what I've learned is that we are the solution to the overwhelming challenges that our country is facing. That if we don't act, they will act for us. And that it's up to us to rise to the amidst the challenges and speak ourselves because the Constitution has empowered us to act. So let us just rise up and let us be counted. Thank you.
It's up to us to rise up. A big round of applause for him, please.
Hi, everyone. Hi. I'm Mr. Elizabeth Monte. I'm a community health worker. I'm also a girls advocate. I'm a mentor. And let me say, I'm glad to be here. So the first thing is that when I go out there, I was here representing the youths. And when I go out there, I will inform them that change starts with me. And as long as we demand for better services and a good environment, a conducive environment, everything starts with me. So whenever there is a public participation to give out our views, let's come in, let's chip in and give out our views. Our voice might bring change. Our voice is the change, and change starts with me. Thank you.
Change starts with me and my voice. Our voices are the change. Thank you so much. We celebrate your comments, and we really want to now move this conversation. As we said, we want at the end of it all to have that practical connection, not just in regards to knowledge, but translate that knowledge into something very tangible that will touch generations to come. We have a keynote address from Transparency International Kenya, just to confirm whether they are present. All right. Do we have Transparency International ready? All right, so that one will be coming in shortly. But in the meantime, on a lighter note, I just like we've had with story. Level.
A visibly pained Francis Sikadiku turned up at the town's police station minus his shirt and holding copies. Some even claim to have witnessed a colony of bees escorting the Ugandan while doing what angry bees normally do, sting. The story, however, gets an even stranger buzz. Francis, it is alleged, turned himself in after the bees struck him inside a car he had stolen after drugging its owner. But it turned out the bees were acting under instructions, at least according to the car owner, who confessed to consulting a famous witch doctor.
The event is what looks like the rare capture of a suspected hardcore criminal whose mission went so, and villagers here say it's all thanks to the powers of a witch doctor. The casting was reminiscent of an Hollywood movie from Nigeria, but no, this is Kaliwa village in Teso district, Busia County. It was claimed that this man is a notorious thief who has allegedly been terrorizing the residents of Malaba town along the Kenya-Uganda border.
Residents of Tala in Ukambani woke up to a shocking spectacle after two suspected thieves, Matinda Mumo and Pius Kioko, turned themselves in while presenting rare symptoms, inflated bellies, The two were in the area to seek the help of a traditional herbalist. It is believed that their stomachs began to protrude after they were allegedly punished for stealing from their neighbors. If only so they can be forgiven.
Sitaiba simu yenyewe tena.
Makofi yake tafadhali.
There.
All right. Thank you so much, Bwana Leonard, for clarifying that. Of course, later on, you'll be giving us the action plan. But for now, you remember, just to cut you short, Bwana Leonard, my apologies for that. Yesterday, we had a panel discussion that was meant to be hosted then, but didn't take place because of time. And Bwana Leonard was part of the panel discussing on free trade agreements and double taxation agreements and the effect on revenue realization efforts. So definitely that's the subject of his conversation now, but later on after lunch, when we come back, he will now deliver that keynote speech that I introduced him, that he'll be talking about, that is handing over IFF's action plan to Kenya's caucus on IFFs. But for now, please let us appreciate him once again, talking to us about free trade agreements and double taxation agreements and the effects on revenue realization efforts. Take it away.
Thank you very much, Makazi. Good afternoon again. My name is Leonard Wanyama, and I am the coordinator of the East African Tax and Governance Network. With some of you, I see you have been looking at our publications, mainly at this point in time, that's what we do. We do a lot of research, but we are working our way in order to do other activities in relation to tax justice, that is capacity building, public interest litigation. And this all comes from the fact that we are hosted by Tax Justice Network. We are their little sibling. We've been with them for quite a while. And our mandate is to champion tax justice for sustainable development at the regional level. Essentially what I want to speak on, and please bear with me, this was a bit on short notice. I don't have the skill of a gentleman I consider a dear friend and a former teacher who, for instance, said that when he sees small crowds, he panics. I consider this a big crowd, so I think the panicking bit is where, because he was my lecturer, I think now, because I see this as a big crowd, I think you can see the question of perspective. Nonetheless, I'll try my best to kind of take you through this subject. Now, in terms of the issue that we are speaking at hand, which was the reaction I was to make yesterday in relation to how we view tax justice in the whole context of human rights-based approaches. We are working at a very specific level in terms of the subject of DTAs in particular. And what we are looking at is the context of double taxation agreements in the region, and then more specifically Kenya. I think about 7 years ago, TGNA conducted an experiment of sorts, thanks to the new constitution, to take the government to court, challenging a double taxation agreement with Mauritius. This is because Mauritius is considered a tax haven, and it is through the instruments of double taxation agreements that funds are both legally and illegally channeled out of the country. So with that experiment, TGNA had a win in which it was declared that the DTA was not procedurally done, in that it did not follow the law in terms of the Treaty Making and Ratification Act. So as this was happening, we also realized across the region, there is competition by each of the East African countries to acquire as many double taxation agreements as possible. Why? Because there is a perspective that investment is attracted by lowering tax. Now, from our point of view, this is not the case. The IMF has clearly found or done studies that show that most investors are not driven by tax incentives per se. They look more at things like political stability, the availability of human resources, and so tax maybe comes about third or fourth in that list. Nonetheless, the logic has been that let's get as many incentives to these companies as possible, and that's obviously then affecting the countries in terms of undermining our domestic revenue mobilization efforts. So when we look at double taxation agreements in particular, my colleague Francis Kairu actually kind of gave the perspective of Kenya, the number of double taxation agreements we are entering. And so we, together with TGNA, went and put in a second double taxation agreement petition. And in this case, knowing that this race of double taxation agreements is driving us in terms of what is referred to a race to the bottom. Like if every country is chasing double taxation agreements and undermining their domestic revenue mobilization, that means that you'll get to a point where you're going down to zero in terms of revenue collection. So that race to the bottom is the context. And if we think about it that way, we thought then we must look at the other double taxation agreements that Kenya is going into. And so we have a second petition. That means the case has grown from one country that we are focusing on to 10 to look at the process of how we are acquiring these double taxation agreements, to look at the technical arguments for this double taxation agreement. So to challenge the justifications, because that is where policymakers are convinced that we really need these instruments, even at instances where we do not. And what are some of these issues that are tackled in double taxation agreements? One, the question of where taxation happens. In this case, it's a principle where we discuss and refer to this as taxation at source or at point of residence. And what do I mean by this? Do you tax a company at the place where the activities are happening, or do you tax the company from its place of origin? Simply put, if it is Facebook, do you tax Facebook at the place where all of you, for instance, are posting the images, writing the messages that get the likes and are monetized by the Facebook organization, or do you tax it in the United States where the company is domiciled? So this is a question that gets discussed or tackled in a double taxation agreement with many countries, particularly from the West, insisting that taxation should be happening at the point of residence. Nonetheless, we know that most of the value is in source countries. So all the trends that we put on our social media and so forth are monetized by the country in their point of residence. But the value is here. If we all stop tweeting, if we all stop putting pictures on Facebook, then Facebook has no value. So that tug of war has to be discussed in relation to where you get the value to tax and get income for the country. Secondly is the question of what is called round tripping. Now, we make the point that double taxation agreements create loopholes that undermine government efforts to raise revenue. But then, if you take foreign companies that come from the countries where you're negotiating, that is one thing. But nonetheless, they also provide loopholes for Kenyan individuals and Kenyan business entities to avoid taxation from their own governments. This is a question that happens a lot in East Africa. And I can give you a bit of a story. When we went to Uganda, and we were told of a story where a Kenyan company that works in Uganda, and we already have kind of common tax laws with Uganda, went to register itself in Mauritius, went back to Uganda as a Mauritius company, yet the Uganda Revenue Authority knew very well this was a Kenyan company. So do you tax based on the ownership, or do you tax based on the fact that this country is now in Mauritius? So there was a tug of war on that issue. And this happens a lot in East Africa. Kenya has had its own instances, and you might have seen this, for instance, I forget the name of this gentleman, but I think it was a liquor company some time back. And that conversation about where is this company based kept coming up. A lot of this happens in the news, but then you find Kenyan individuals move to other countries. So you can take your company, register it in Singapore, then it comes back and claims that it is a company from Singapore so that it gets lower tax benefits because of a DTA that you might have signed with Singapore. Of course, then I've alluded to the fact that then there's a benefit to foreign companies. Now you have companies that make their money, among other activities, by finding the place where taxation is lower. We call this treaty shopping. So they go from country to country where they know that tax is lower and therefore abuse the tax systems of those countries. And based on the double taxation agreements that you have, they get an opportunity to suck out as much money as they can. If you change the tax laws, they immediately take off. A lot of this happens without the benefit of improved jobs, without, of course, the benefit of taxation or the improvement of infrastructure that is normally expected. Then, of course, we have to talk about how the principle of tax neutrality is undermined. This might not be a good example, but if I am in the business of selling paper and I decide to source my product from Webuye paper mills, but someone is coming in from a country where they have a double taxation agreement, and that means they can produce or give their paper cheaper, we won't be competing at the same level, despite the fact that we're selling the same product and so forth. So there are some discrepancies that double taxation agreement creates in the tax structure, making it more complicated, but mostly disadvantaging local entities in the country. And then lastly, the question of limitation of benefits. So how do you regulate the benefits that are accrued to these companies? Because this is one way in which they manage to
escape the taxman. By this, to put it simply, if you take the question of who owns a company, how do you get to know them properly enough so that you can identify where to tax actual activities that are done? Mainly, and I suspect my colleague Alvin Mosioma had spoken about Russian dolls. You look at a company, you try to find out who is the owner, and it's one entity after another. In the recent past, what you might have seen as a very absurd thing is a very common occurrence. This is particularly in the case of the KEMSA scandal. Money was stolen. When you look at who are the entities, it does not look plausible. When you find the name and you find the ownership, you can clearly see that there are other people who are being fronted. And the more you keep digging, the more you keep finding that it's not the same people. We've seen this, and there have been a number of exposes by African Uncensored. I think they uncovered a web of a lady and a group of people who stole money in Elgeyo Marakwet, if I'm not wrong, where it was about 26 companies that were receiving all the contracts from a county. And this is happening across all 47 counties. Then you have it at the national government. And then you have those that are just conducting business properly, but still whisking away a lot of the profits in that regard. So essentially, the idea here is to challenge the fact that there is an international system that is plugging into the local structure of conduit states, a structure in which you take out money from all these companies, undermining service delivery, and then making Kenyans suffer in that regard. And now to tie this to what Dr. Kumba Miruka said, and going straight to the question of solutions. Human rights-based approaches not only provide us the language, but the framework. If I go back to what I was speaking about, our first petition and our second petition, and you take the anagram that he was speaking of yesterday, that is panel, that tax policies have to have participation, have to have accountability, have to be non-discriminatory, it must empower people, and must be within the rule of law. This is the only way we have been able to challenge a lot of these things that are happening in our country today, and we now have taken the opportunity to try and challenge this at the regional level. So first, if you take the DTA petitions, the Kenya DTA petitions, one being the first Mauritius case and the second one that has expanded into 10 countries, we obviously ask if the public participation has been happening. And if not public participation, we also go further to ask if there are also policy considerations. So stakeholders, technical stakeholders, were they involved in developing a DTA? With that in mind, we then ask about the technical arguments and economic considerations in place. So for instance, at this point in time, one thing we keep demanding is the question of how people making this decision based on a cost-benefit analysis. Because let's say that indeed we have to accept double taxation agreements are good for foreign policy and so forth. Fine. What do we gain and what do we benefit? The mathematics of that, the figures by sector have to be determined so that it's clear to the decision makers that this is necessary. In terms of accountability, same process. But then who are the decision makers? A lot of the power has been vested in the ministry, but we feel Parliament should take a lot more role in this process, because by the terms of our constitution, they are the body that decides on public finances in Kenya. And so they must definitely have a bigger role in this process. A lot of the times we have seen these DTAs had come into force without parliamentary considerations. We had the chance to speak to the Parliamentary Committee on Finance and Planning, and we also discovered other hindrances. So for instance, in terms of how that legislation is brought to Parliament, you either accept it all or refuse it all. But of course, these kinds of laws come with a political bearing, and many times parliamentarians are in a situation where they have to accept it, and they don't know, because they don't have a cost-benefit analysis, whether what they are doing is right or wrong, other than in a political context. Third, obviously, non-discriminatory in terms of what are the impacts. So once you know the figures, what is the impact? If you're losing, for instance, $500 million, as was the case, I think in the year 2020, what is the impact for women, for services like health? Clearly, apologies. Apologies for that. Yes. So clearly, what does that mean for service delivery? With the loss of $500 million, I think Kenya was not able to employ about 64,000 nurses, if not more. This is based on some studies by Tax Justice Network. So in terms of non-discrimination, what does the loss of all those nurses mean for healthcare for women, for instance? If you then move to empowerment, you can clearly see that that means in terms of health expectations, we all begin to lose out, because every day we go out and we see that we have nurses on the street protesting. And even when you go to hospitals, they're not attentive to you. They're thinking about their daily bread. They really don't have time for you. So if they stick the needle wrongly in your artery and you bleed out and die, it's because there are many other things. And then you suffer because you're not empowered to get the medication that you need or the services that you need. But also when you go there, you can't ask anything across the spectrum. You can't ask the decision maker. You can't ask the service provider. You can't ask any other leader. And then you're also affected by your ill health. So it's all like a crisis, a chain of crisis across the board. And lastly, obviously, the rule of law. If you don't follow one law, that means you won't follow another. So we have to kind of put a stopgap measure so that we ask our decision makers to follow the law. I don't know how much time I have, but in terms of listing where this has been working, I know the double taxation agreement might be quite far off as an example. It is a subject where there's a lot of technicality, because if I start even just delving into source versus residence, or the questions of beneficial ownership, you start wondering, what really does it mean for me if these are tax issues that are dealt with ambassadors and accountants and lawyers and all those technical people? We can look at it from the point of DTS, but we can also look at it at local level tax policy. Now, we've had the chance to look at this year's finance bill, and together with my colleague Irene, with his and team, I believe a number of colleagues came. I think TISA was also part of that team. A number of us challenged the finance bill and demanded that questions such as VAT be relooked. We might not blow our trumpet enough, but things like the tax on bread, the tax on motorcycles, all that, we challenged them, and we were given an opportunity to speak about Mwananchi's concerns. So other than the finance bill, you have the county finance bills and so forth. You have the Income Tax Act. You have so many other taxation laws, which whenever you get an opportunity, you have to challenge them. Other than the finance bill, of course, I've mentioned the double taxation agreements. But as I mentioned again, we have taken this chance to also challenge policy across the region. We now have a case against the Rwandan government, that is the Kigali International Financial Center and the investment process, because if it is denying other regional members from investing freely in Rwanda, it beats the purpose of why we have an East African community. We might see it as experimental now, but it is a chance for us to engage these tax issues further. And just to close, why is this very important? And I want to take this from the experience we had when we were challenging the finance bill. Every year, once the finance bill is announced, everyone who has an issue on taxation is given an opportunity to go there and speak on taxation. The betting companies arrive there and they say, we want less tax. The beer companies will go there and speak to their issues. Tobacco will go there. Government goes there. You can find KRA, or let's say Kenha, for instance, an agency will say, we need tax relief because we have certain countries that are coming in to build for us roads. So for instance, you saw the issue they said about Japanese roads. Everyone goes to the parliamentary committee to speak out about their issues. Individuals go, former MPs go. Everyone who has a chance, put in your submission and go there. This year when we went, I think we got the last day, if I remember correctly. And when we had finished our presentation, and we'd walked out to stand and figure out now what to do, because we had taken a ride quite out of town. I think that was a village market while all our offices are from the other side. And MP quickly rushed out and said, thank you for coming, because we didn't have a justification to cut the taxes, such as the VAT on bread or motorcycle. We didn't have an answer when they asked us, if you cut these taxes, where will you get the money? We were lucky enough to have calculated some figure from Foliage somewhere and showed how we can get at least it was 200 million from one calculation or one transaction. So whenever you get a chance to challenge, to ask these policy questions, it is good to go there and ask these questions. And with that, I'd like to close. Thank you very much.
Close to Bennett. So if you have any questions for Bennett, please note this down. We have one more presentation, then you have questions. Really, we must challenge policy, and we appreciate what you do. Challenging policy across the regions. Ask our decision makers to follow the law. Ask questions. Was there public participation, policy considerations, technical arguments, economic considerations? Are decisions being made after cost and benefit analysis? We must ask the questions. Now, ladies and gentlemen, to talk to us on the issue of free trade agreements. Mr. has put together for Mr. Davis Nyachi. Mr. Davis Nyachi, welcome.
Yes, thank you so much for the introduction. Thank you so much as well to the organizers for inviting me to speak to you briefly about issues of FTAs and how they relate to tax. I'm Davis Nyatenga. I am the Trade and Investment Program Officer at EcoNews Africa, which is a civil society organization based in Nairobi. We're also hosted by the Tax Justice Network Africa, and we deal with economic justice issues related to trade and investment, extractive sector, and also finance and development. So for me, I would like to speak to you with regards to free trade agreements and what that means for revenue mobilization, and also related to the discussion that that Dr. Miruka brought up yesterday with regards to the human rights obligations. So free trade agreements, generally, what are they? These are agreements between two or more countries that basically allow the free, depending on the scope, allow for the free movement of goods between those two countries, or it could be capital or free movement of people. It all depends on the scope of the agreement. And the nature changes depending on, again, how the agreement is set up, because there are some agreements that are non-reciprocal in nature, which is, for example, if you had the African Growth Opportunity Act, which is the agreement between US and Africa, which is non-reciprocal in nature, meaning that us as Africans, we can export our goods to US tax-free, but US cannot do the same thing. They cannot send their goods to Africa without a custom duty being levied on them. And then there's the reciprocal ones in nature. For example, here in Kenya, we're looking at the UK-Kenya Free Trade Agreement. And that basically means that all the provisions and all the obligations in that agreement fall equally to both parties. So if Kenya is trying to export tea to UK at 0%, similarly, UK can export tea back to Kenya at 0%. So that's the reciprocal in nature. And then, of course, all these agreements, they differ in terms of scope. In terms of the scope and the rules and obligations that fall within these agreements. There are some that, for example, the sanitary and phytosanitary standards, which is basically measures on how, basically controlling or making sure that any fruit or vegetable that's being exported to a different country meets certain standards as laid out by the local administration or the local agency. So they all differ in terms of their scope, in terms of their rules. Some have different rules of origins, which are the basically a rule of origin dictates the maximum amount of within a product, the capacity through which the capacity of that product that can only be coming from a different country, from a third party. And there are all different types of limitations that come with that. So basically, being a free trade agreement, you're eliminating custom duties, you're eliminating various tariffs that are normally levied on products. So of course, in the immediate short-term effect, that means that the revenue that the government collects from these tariffs disappear. Because if you're levying zero taxes on certain products, or if you're progressively lowering taxes on some products, that generally means that the tariff revenue, at least in the short term, that the government collects from these products disappears. But then now in the long term, that all depends on what is the effect of this free trade agreement. If, let's say, as you may be aware, Kenya is currently negotiating a free trade agreement with the US. The US generally has a bigger capacity to produce in various sectors. As EcoNews, we did an econometric study on the implications or the potential implications of the US-Kenya free trade agreement to the Kenyan market. And we came to realize that there are various sectors within the agriculture space. For example, the maize sector, we're looking at beef and poultry, that stand to lose quite a bit. Of course, the numbers being a study, it was all about seeing the magnitude. Of course, numbers will change, but generally we found that those were the three subsectors that would lose quite a bit. And so now, when you're opening up a country, let's say if US Kenya were to sign this comprehensive free trade agreement where we liberalize these sectors, of course there'll be an influx of maize coming from the US into Kenya. And what does that mean? That means that our maize sector here in Kenya is damaged, right? And so and then the implication of that is all those the people who are employed in that sector lose their jobs, and that ripple effect again is the government income tax that they normally collect from these individuals or any other taxes that come from that sector locally disappear. So the long-term effect is all dependent on what actually happens. What are the sectoral effects coming out from this free trade agreement? Which sectors will be displaced? Which sectors will benefit? So if another sector, let's say, was to grow, hypothetical example, let's say it was the beef sector itself, that was going to benefit because the cost of production here in Kenya is much cheaper than that of US. Then we can export. We're able to export more of our beef to US, and through that we can generate more people will be employed, and thus more there'll be an opportunity for more income tax and a bigger tax base for the government. So those are the short-term effect is certainly that there'll be tariff revenue loss. But now the long-term effects all depend now on what happens to the sectoral, the changes or the sectoral effects from entering in such an agreement. Now, again, what is normally touted about entering into these free trade agreements are the benefits of improved market access for our farmers or for our producers. And so, with the improved market access, that boosts our growth and poverty reduction happens. Again, that is just a tout. You have to actually conduct the research and be able to understand, is this actually what is going to happen? Are we actually going to benefit? And the research needs to be one that's actually open for scrutinization to all parties. For example, the recent UK-Kenya economic partnership agreements that we signed earlier this year, the negotiators are touted to us that they had actually conducted an economic impact assessment, and they did indeed find that we stand to benefit. Now the question is, are we able to actually scrutinize this assessment that you've done so that we can be able to, because one can easily do an easy Excel extrapolation. Look at the exports for the past and let's just extrapolate it, and we assume this is what is going to happen. But that's not a quality assessment. It needs to be, undertaken more rigorously and open to public scrutinization and so on. So now, linking back to the discussion of Dr. Miruka yesterday with regards to human rights, now particularly in the context of free trade agreements, I would like to focus on, there's two aspects I'd like to look at. One is on the process side of things, and the other one is on the substance side of things. Now, on the process side of things, the issue of access to information remains to be a big challenge within this space of free trade agreements. For example, now looking back at the UK-Kenya Economic Partnership Agreement, when the document was released to the public, they failed to avail the relevant annexes that actually indicate these are the tariff lines that were, these are the products that we seek to have zero tariffs on eventually or immediately, and these are the products that we seek to protect or ensure that we'll have tariffs no matter what happens in the agreement. Now, how then do you expect us to have effective public participation if we don't have access to all that information? That poses a big challenge. How can we have effective public participation if we don't have access to all the information? And now that is just the UK-Kenya Economic Partnership Agreement. It's also right now, as you are aware, the member states of the African Continental Free Trade Area are busy submitting the tariff lines that they're willing to liberalize under the agreement. And unfortunately, having access to what actually as Kenya we're going to liberalize is still proving to be difficult. So again, the such processes of ensuring this access to information such that public participation can become effective remains to be a problem. Now, looking at the substance side of things, now this brings us back to the issue of productive capacities that I was trying to raise. Some of these arguments, for example, now again back to the US-Kenya agreement, there's been a lot of touting on the US side to sort of have Kenya liberalize its issues to do with the plastics. The plastic industry in the US is lobbying the US negotiators to try and make Kenya drop its ban on plastics. I'd like to commend the Kenyan government for standing tall and not falling for that. And because now, what happened is that China ended up banning the importation of plastics. US is looking for another market to go and export its plastics to. They're trying to use this US-Kenya Free Trade Agreement as an avenue through which plastics can now be exported to the African continent. So that now poses to be a challenge, because if such substance within a free trade agreement allows for the exportation of plastics, what does that mean now to our right to a clean, safe environment? What does that mean to our our human rights obligation to a clean, safe and clean and safe environment? And then the other issues, the issues of the right to food. What does that mean? If we were to liberalize some of our agricultural sectors, let's look at Ghana, for example. Ghana entered the agreement with the European Union about 4 or 5 years ago or so. And what happened was that they ended up liberalizing 80% of the products that are coming from the EU, and that included also tomatoes. So now the tomatoes from EU are coming to Ghana. They flooded the Ghanaian market. Now the local Ghanaian tomato market is collapsed. It's done. You're finding that those tomato workers are now looking, they're actually moving abroad to Europe, and even in Europe, they're living in bad conditions, working in poor conditions, and as such, that's the quality of life has actually been affected as a result. But now the back to the right foot is that now what happens in the event of we have an industry, let's say like here in Kenya, we liberalize our maize sector. Our maize, maize from US comes and floods our market. Our local maize industry gets destroyed. Another event like COVID happens, and where the global supply chain comes to a halt, and all of a sudden we can't get maize here in Kenya. What does that mean to our right food? So those are some of the human rights issues that come into play within free trade agreements. And so, human rights impact assessments have become a very critical part of free trade agreements analysis. So before entering into any, or before negotiations, you tend to find that countries are undertaking their own independent human rights impact assessment, such that it can guide the negotiations going forward with regards to the free trade agreement. And just to add on, in Kenya we do have an agency, at least on paper, known as the Kenya Trade Remedies Agency. Unfortunately, this agency is yet to be operationalized, and so if any issues arise from free trade agreements, if we're trying to look for remedial mechanisms for our free trade agreements, how can we, who do we go to? That remains the biggest challenge, again, with regards to the space of free trade agreements. So just to conclude, I think there is need for continual, the public participation and the issue of access to information remains to be a big problem in the space of free trade agreements. We need that information for us to actually conduct an effective public participation. There's still the issue of the need to rethink our scope of these agreements. When you're looking at countries like now US and Japan are in an agreement that's very limited in scope. As Kenya, we're looking for issues, we're looking to do trade in goods, trade in services, intellectual property. We're looking at a whole wide array of issues. Meanwhile, you find that countries nowadays are just concentrating on one side. US and Japan are so far into the trade in goods, and now they're looking to go into digital trade. So limiting the scope of these agreements could be a good way to move on. Again, and then the issue of more assessments, continuous research on the implications of these agreements, such that they can inform the negotiations going forward. I think that remains to be a really important thing. In this space, it seems like we're very limited in number, but I believe that as we get the interest of more and more people, things will become, the interest will grow and people will be more interested in undertaking assessments with regards to this. So yes, I think that is it for now.
All right. Thank you so much for taking this conversation. It's not just about the short term, but also looking at the long term effects. Research and assessment must be open to scrutiny by all parties. Access to information remains a big challenge regarding FTAs. It's of course really concerned. How can we have effective public participation? We don't have all the information. Definitely continuous assessment of these assessments. Any questions before we close the line? I can see Michael, excellent. So let's have the Michael answer. We have 2 questions, 3 questions. Let's take all the questions for the please take note of the questions you want to respond to. So those are three. Any others? Any others? Four. Okay. So let's start with Madam Iman. Go ahead.
Thank you so much. And thank you to the two presenters. I'm going to try to wrap a couple of questions into one, and they all relate to the free trade agreements. The first question is, to what extent are you able to collaborate with or exchange information with your counterparts in the U.S.? AGOA, as it's designed, will likely expire 2025. And what the government, U.S. government supporters have said that the whole purpose of AGOA was to be able to position itself and potential partners into bilateral agreements. There are a number of organizations in the U.S. that in the past anyway have really proposed the Kenya free trade agreement precisely for the reasons that you have outlined, and have been very concerned about the U.S. entering into FTAs with much smaller markets because there's a huge disadvantage. And then, so that's the first question. And then relatedly, if a free trade agreement goes forward, within the agreement, the negotiating process, is it possible, are you all thinking about the possibility of including language that would require, for example, the U.S. to take some level of responsibility for the corporations that reside in the U.S. To take responsibility for limiting their ability to kind of perpetuate the illicit financial flows mechanisms, particularly around tax evasion, tax avoidance, as well as some of the trade measures. And then lastly, to what extent does that include a concern around worker rights? FTAs frequently reduce, in some cases eliminate, restrict the possibility of protecting worker rights in key industries. And you've already touched upon an environmental impact in regard to the plastics, but I wonder if there are other environmental impacts that you're looking at as well.
Two questions. The first question is, I think to both our panelists, concerning BTS and this free trade agreements. Do you think now, instead of looking at the approach being national interest, is it a thing that we approach it at the regional level, so that now we are having standard when it comes to this BTS and this free trade agreement, because it seems that when one country goes there, it's quite difficult for them to have fair negotiations. Then, secondly, within the state, other than the government, we have individual actors within the state that kind of hijack these BTS and these free trade agreements for their own benefit.
Yeah, thank you. Each one of the issues I wanted to raise, he has already highlighted it, so I'll explain it in a different perspective. Thank you, Nyachenga and Wanyama, for the very useful presentation on details around DTS and FTS. Three questions. One is, Wanyama, you alluded to something that is almost akin to the race to the bottom at a regional level. That countries are now thinking of setting up their own tax havens, call it so, through the international financial center. So the Nairobi one, the Kigali one, I'm sure another country will come up with their version, maybe Uganda, Tanzania next. But my question is, within the East African community context, because one of the key objectives of economic blocks is also to promote collective economic benefits, if I were to call it so. And these collective economic benefits arise out of either common markets, customs unions, or in certain cases when it's far more complex, political unions or political confederations, depending on what you want to call it. Is there a way that at a campaign level, we can mobilize these countries to begin thinking about tax harmonization rather than tax competition? I have in mind, for instance, the varying rates of VAT across the East African region. You know, Tanzania, I think it's at 18%, Kenya 16%, Uganda, I think it's around that. I'm not very sure of the right figure. But when you have a region of economic bloc that actually have different tax rates, then I think one of the key priorities should be how do you begin talking about tax harmonization? And the reason I'm asking this is because it can be a good way of addressing the problem of countries setting up their own versions of international financial centers. Then my second question is with regard to what you had mentioned earlier. When you are negotiating, and this is specific in the chamber, when you are negotiating FTAs, is there a way at a regional level we can mobilize and negotiate as a bloc? And the reason I'm saying this is because we know that within the European Union and the United States, they tend to classify different African countries at different levels of development. So some are middle income, some are low income, others are less developed, others are developing, depending on the language. The technicality of that is that you get different considerations depending on your level of classification of development. And I think, in my opinion, it's a question of divide and rule. So classify them differently, then we can manipulate them to how to negotiate an FTA that is in our favor. So is there a way that you can mobilize the region to negotiate collectively, you know, as I was mentioned? Then my final question is a challenge that arises out of multiple membership, multiple economic blocs. So you have Tanzania in SADC, it's also in EAC. You have Kenya in COMESA and EAC, and each of these economic blocs have different or varying, let me use that word, they are varying economic agreements, particularly with regard to taxation, more importantly, eliminating tax barriers and also non-tariff barriers, so tariff barriers and non-tariff barriers for different economic blocs. So how do you deal with this challenge of multiple membership, particularly when you're talking about the FTA?
All right, so thank you so much. I'd kindly request Bwana Davis and Leonard to kindly respond. And as you respond, also give your final remarks. So we start with Davis.
All right, yes, there's a couple of questions, but I'll deal with them accordingly. So with regards to your questions, as to whether or not we have a platform for exchanging information with our counterparts in the US, yes, at the moment we do. We are in touch with, for example, the Econews, where what we public Citizen Watch in the US. They're they're very well versed in these issues, so we do have a communication between us, regular meetings, to just keep us updated on what's going on. So yes, there's an exchange of information. It could be more like certainly, but yeah, there's definitely a channel through which we're engaging to at least know what is going on their side, and if we Language to mitigate the illicit financial flows. So what we did a legal analysis of the US Kenya FTA, but based on the United States, the States, Mexico, Canada agreement. Because basically the reason why we chose the USMCA is, it's a comprehensive agreement, and while the talks were being initiated, there were indications that that was going to be the reference document to come up with the US Kenya FTA agreement, the document itself. So through that, there is an investment chapter, and in that investment chapter, there are certain recommendations that we have made that the consultant did share with us with regards to how to best ensure that we combat this issue of tax evasion, how the rights and obligations for investors, what we need to ensure, the language we need to include in the agreement to ensure that as Kenya we are protected from the rights and the obligations are balanced between the investors from the US and the Kenyan government. So there are recommendations that have come out. Unfortunately, we still not had an opportunity to submit them to the negotiators. The most recent submission we did was on the environment chapter. We made a request for comments, and we did do a submission with regards to that. So when we get the information that they are looking for, the submission with regards to the investment chapter, that is when we plan on submitting the outline. Again, similar to work right with the FTA, we've done it's about 300-page document analysis of looking as well on issues of labor and how to handle them within the US Kenya. So we have had an opportunity to do so. Now it's just a matter of sitting down with the various parliamentary groups and particularly the negotiators. We initially had an opportunity for our lawyer, the legal consultant who we hired to actually present to the negotiating team, and that was back in April. Since the Biden administration came and the talks went sour, there hadn't been much progress until recently when they started requesting for those submissions. So now, depending on how things evolve, we are starting looking towards how we are engaging more on this issue if the signal for the talks are coming out. So again, those are the workers' rights environment. It's about 20 chapters. If you look at the USFC, it's all those aspects, issues of resolution and so on. We also have that into consideration in our analysis. With regards to how approaching the FTAs as a region, this is something that has been of huge debate even now, because what we're seeing is even the implementation of the AFCFTA is becoming a challenge. When you're having all these various regional blocks at the East African community, SADC, ECOWAS all signing unique agreements with the EU with different rules. For example, issues of rules of origin. Each of them have their unique rules. So now the challenge is how you integrating all these different rules into one to create this AFCFTA that has policy harmonization. Because if you just agree to sign the agreement, there's a loophole where if EAC has better rates than what ECOWAS is offering, the products will come into EAC and find a way to ECOWAS because they have safety functions and so on. So that the issue of policy harmonization is still quite it's a big challenge. The thing is the need for political will to do this. Because if you're having interests, Kenya, for example, this Kenya-UK economic partnership agreement, ideally, even from the UK side, they were looking at they are pushing it as an East African community. But the issue is that, again, the classification of countries, where Tanzania is a lower income country compared to Kenya, which is an income country. So what happens is that the taxation rates, Tanzania can still access the UK market and the preferential market access that the UK have, the GSP that they have, but Kenya cannot. So what does Kenya do in that situation? Because UK is a really big destination market for Kenya. So that need for that urgency on the Kenyan side to actually get into an FTA with the UK. But again, without the political will on the Kenyan side to wait, let's consider the issues that other EAC member states are having. We delivered them before now. We go into an argument that not necessarily on the regional level. What we're trying to advocate for is a more, I can say that what they use to take that regional block perspective, regional block approach. Because if you go in at it as an individual country, then those challenges of policy harmonization become very evident. They become very, because now if I go as Kenya and I decide to get into an agreement with the EU, because the other African states are not willing to participate or are trying to basically align their own nations first, then what does that mean if my rules of origin or various provisions within my agreement are different to that of the other African states? For example, issues of taxes, let's say, what happens when you decide to protect one sector, let's say the tea sector, we put a 35% tariff on tea sector, but then on the African side, they put a 10%. What does that mean in terms of policy harmonization? So again, it's a matter of, it's more on the side of political will to be able to, wait first, let's get our interests together, move as a block, because that's what the European Union is doing, moving as a block to ensure that any agreements that we have less harmonization going on. So for now.
Thank you. So I will start responding to the questions. First, I'll start on the issue of DTAs at the regional level. So first, let me just speak again on that issue of the race to the bottom. We have to realize what is happening is that we are developing an ecosystem. Each of these countries is rushing to get DTAs. Now, after that, you have two countries, that is two cities, Nairobi and Kigali, and therefore two countries, Kenya and Rwanda, that are racing to have international financial centers. Simply put, they're trying to create tax havens within their countries. And then lastly, there's the link to tax havens. Now, all this is being done in the name of investment. And so we have to interrogate that ecosystem. And how, for instance, the international financial centers will link to all these DTAs and then link to the tax havens. The exposés that have been happening, whether it is Pandora, whether it is Panama, whether it is Mauritius leaks, Luxembourg leaks, can clearly show you what is already happening. Nonetheless, at the regional level, as we continue to have the common external tariffs, common market processes, probably even the political process, one thing that has come out is that the EAC as a region has signed a regional DTA. So they've come together and they've come up with this regional DTA. And I think the only country that hasn't signed so that it goes into effect is Tanzania. So I think as countries have to figure out how do we speak to Tanzania so that they take this up, how do we address their interests, as we also move into ensuring that this regional PTA serves the interests of all these countries. That is the work to do. We are looking at how to influence that conversation so that tax harmonization is not only a question about the VAT as well, but also the question of the DTA. Now, on the other subjects, the VAT, there is constant discussion. A lot of the other taxations have a lot of discussion about harmonization. Why? Because a lot of this has impact on the border with the free trade movement of people and so forth. There is a lot of that. But now on the question on investment, I think as countries, we are still very, very competitive or in a state of competition against each other, each trying to win in this process. Hence, you can see the race to the bottom. Now, everyone is trying to, for instance, let me get 20 DTAs before the next country with lower rates as opposed to the next country. But then the response will be the next country will think of a longer list of DTAs and lower rates. And in the end, the amounts that governments can raise keep reducing. So essentially, maybe if we come together on a regional DTA, common DTA, and agree, so that things are kind of standardized on that front. And in that effect, we have a publication we are working on, and hopefully it will be helpful to not only map the DTAs, but also speak to these issues and why there is an importance in terms of getting a regional DTA. So hopefully forthcoming, we'll be able to come back to you with this study so that again, we can discuss this issue, learn more. I will speak to then the question of capture. As raised by the gentleman, what's your name, sir? Daniel. Okay. And this is generally a question about the nature of government and the nature of the political process. Indeed, if you look at beneficiaries of some of these DTAs, indeed, you will find there has to be an element of capture. But then the process of government is that individual interests have to compete with group interests. And so I would challenge each and every one of us in this room to work to develop the right group interests so that we can influence national interests, we can curtail selfish interests, and therefore it is a situation in which we have to pay attention on who these interests are or these interest groups are. If I go back to my presentation, if a sector has interests that are detrimental to the citizenry, we should be able to challenge. So let's prepare ourselves. It's not only a question of reading, let's create the networks. Who's the kind of lawyer you need to help you to draft a response to parliament and so forth. And if you tie it into the question of the multiple memberships, I think as my colleague here has said, we also have to pay attention to what is going on in the AFCFTA. And in paying attention to that, then let's learn, let's look at what are the processes there. Let's find out at what points they are meeting, what are the issues they're discussing, how are we going to strategically put in our interests there as individuals or as groups, whether it's farmers, whether it's civil society, and so forth. In that, we must realize that we have to put ourselves in a perpetual state of organization. Strategize to influence these entities. As a colleague of mine likes saying, we have to organize and not agonize. Because we will know that these institutions have problems or they look at things a bit differently from us. So it is our responsibility to look at how to influence them. If we don't have the resources, then let's look at strategy on influencing this without resources. If we have resources, then let's use resources to influence them. So where are we placed and how are they placed? And how do we go doing this constant engagement so that we get to the right place? Thank you.
Well, big round of applause for the Davis Nyachienga, Leonard Wanyama. Thank you so much for talking to us about free trade agreements and implementation agreements and their effect on revenue realization up to the end of the session. Final one is big note on the lunch, so I kindly request, as always, for debate. Speech here, quarter past the hour, Many thanks to those joining us by Zoom. Let's speak 15 minutes past the hour. Ladies and gentlemen. Section. So much.
Not in today, we're gonna get the world party. We got enough for everybody. Celebrate. Ndugu yangu, chuki na ukabila hatutaki hata kamwe, lazima tuungane tuijenge nchi yetu.
wapi niseme nini? Mamangu, she didn't know. Hizi shida zitaisha lini? Nakumbuka tulizunguka.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap. Miwili bila nyumba, 3 years nikabaki na mama pekee. Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
7, 8 and 9, wimbo historia, ndege nikapanda, nikamwona chukizwa kila siku sala Mungu tenda miujiza. Mama lilia akijiuliza, nilipenda ni baraka ziwe nami. I believe, ninaweza, unaweza. I believe, tunaweza, tunaweza. I believe, ninaweza, unaweza. So many days, so many nights, thinking of it.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap. Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
Enlacé, main dans la main peau contre peau, accro au saguet. Tu notais tout dans ton carnet, l'écho des couleurs, la caméra dans le cœur, mille oiseaux tout là-haut, loin au-delà des plateaux, pour la voir et l'attraper. Il te faut voler, voler. Congo, très beau. Sur la photo, c'était parfait.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
Pagayer dans le bonheur. Allô, tes photos, ta caméra dans le cœur. Car l'oiseau tout là-haut, loin au-delà des plateaux, pour la voir et oh, l'attraper, il te faut voler, voler. Regarde-les tous ces oiseaux de pluie, ces oiseaux de pleurs. Regarde-les tous ces oiseaux de pluie, ces oiseaux de pleurs.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
Regarde-les tous ces oiseaux de pluie, ces oiseaux de pleurs. Regarde-les tous ces oiseaux de pluie, ces oiseaux de pleurs. Ces oiseaux de pluie, ces oiseaux de pleurs.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
Near the edge, used to feel falling. I never swam far from shore, never tried the secret door. But when you give me love, when you give me love, I have no fear of heights, no fear of the deep blue sea. Although it could drown me, I know it could drown me. I didn't want.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation, combating IFFs to bridge Africa's widening inequality gap.
I was scared of what I couldn't keep. But when you give me love, when you give me love, I have no fear of heights, no fear of the deep blue sea. Although it could drown me, I know it could drown me. And nothing could break us.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation. Combating IFFs to bridge Africa's widening inequality gap.
Nakati midongo na kataweya Iwobe pa na bumambembe Nge taboso nanino.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation. Combating IFFs to bridge Africa's widening inequality gap.
Nasipinani na mende no pola Muto Suninga muna woni wo suninga Nakusi bebango jita Omuwaso mwaduta longoni Keka sona nenene Anonimu nawo Yorubu nyabo Na keke dimbe ya wado.
Welcome to the 9th Pan-African Conference on Illicit Financial Flows and Taxation. Combating IFFs to bridge Africa's widening inequality gap.
Nasibineni na mende no pola Muto Suninga muna woni wo suninga Natondi wananginya esibedi mende Neni, get so neni no. Oh, wadi, darling. Lulu, kika sona nene. Anu nuna muto wo, libunya po.
back to celebrate. Now ready to start. Should start in the next 10 seconds. Suppose as I hold the meeting to order. As we're talking about combating IFFs. There's a quick announcement here. Julius McCauley being called outside. So please attend to that if you're here. Now, as we kick off. Is out there. I think. But what if it's very close? What if it's very close to you? This is a story. I don't know how you'll take this story, but this is a story of.
Policemen attached to the quick response team giving a dramatic chase to a suspected conman in Kisumu's Nubian estate. His son, Kevin, is the one who snitched on him. A machine believed to be used by the suspect to print the phony money was impounded from his house.
Hata kuna jamaa alimpiga kwa nyumba ya kuprint.
So he is your father?
He is my father.
Your real father?
My real father. Shida yangu aswa ni atusaidii kwa family. Despite the fact hata akifanya hii kazi yake hii, pesa anapata anatumia yote peke yake. Atusaidii kwa nyumba.
Just a thought. Thank you so much. We've come a long way with him. One time was one of my directors, I believe. Thank you so much. Thank you so much. Many thanks.
how do you actually get data together? And then what do you do with data? Because often, when I was a student of economics at high school, the reason we signed up in the class as 38 and then we started exams as 15 is because the teacher kept on saying, when you go to the university, you'll have to do econometrics, which is always a troublesome thing for people at the university. Nevertheless, as somebody who pays taxes and as somebody whose money is used by the government every other day, it's always important to understand what do you do, how do you actually get data, and what do you do with that data. And just as Mwakazi said in the introductory remarks before the speakers come in here, I can tell you for a fact that if you don't have a national Bureau of Statistics that works, if you don't have a national Bureau of Statistics that works, you know that little house down they are called a Hesabu house. That's probably the engine of the economy because it is where they aggregate all this data and they're able to pull it out of the box, and that's what drives policy decisions. So we are hoping that for sure, if we're going to talk about inclusion and equity in relation to how we use, access, and use data that relates to tax and economics, that probably when we live here, all of us, when somebody says they're going to talk about statistics, you don't walk out, but you sit and listen. Thank you very much and welcome to this session. I hope it will be productive.
So thank you so much. Actually, one of the panelists will be joining us online. So that is Shitemi Hamadi, Africa Uncensored. So I hope you are ready. So just to confirm whether we have the rest of the panelists. Kenneth Okwaro. Excellent. So Kenneth Okwaro is here. So you can kindly take your seat at the front. Shitemi, I can see you via Zoom. I'm sure you're ready. Kakure Kasheshi. Excellent. Please take your seat. A big round of applause for them even as they take their seats. Thank you so much. And do we have Warida Latif McKenna? Okay, that will be via Zoom. So I'm sure right now we have a complete panel. So I'll take it back to Dr. Tom Odhiambo to moderate the session. And please, as always, take note of the speakers even as they make their preliminary remarks. If you have a question, note it down so that it's done with such precision, so that the questions are very direct. But over to you.
Thank you once more, Mwakazi. The lady and the gentleman are people who work in the media. They work with media. And if we're talking about dealing with illicit financial flows and taxation, there is no better co-genre with individuals who do this kind of work than the media. Let me just do a test here. How many of you actually open the economic or business pages of your newspapers, whether online or a hard copy? Let me see. If you actually do open, there's nothing wrong if you don't open. I can tell you many people don't open those pages. There's one reason. That reason is, and I write for the media and I teach media students. And one reason is that for quite a long time, if you read those pages, you didn't understand what they're saying, right? It's like the people who present news, business news, they often speak in a language that's actually Greek. You can still study Greek, but the kind of Greek they speak on TV, you can't understand it. And so for me, it's important that these two are here and that sorry, I mean, Shitemi is joining us online, but Kaure is here, and she's going to talk on behalf of the Kenya Editors Guild about how we want to see the editors as partners in tracking and monitoring and disseminating information about illicit financial flows. So, Kaure Gasheshe, please welcome and talk to us. We want this session to be as conversational as possible. I teach in this university, and for the past 10 years, I have never lectured. I do seminars, I talk to my students. Lectures can be extremely boring. So, Kaure, please, welcome.
So I have been put on the spot, but thank you. I'm very happy to be here on behalf of the Kenya Editors Guild. I'm an editor at The Standard. I currently handle our data research and investigations desk. So I'm feeling very at home. So I'm a bit shaken that you guys don't open business news and then we tell ourselves that business news is the best selling content. Gosh. But it's good to receive that kind of feedback. I think it's something that we have been really working on making business news a bit more accessible to the public. And I'm a bit worried that we are not doing it, but I'm happy for the hands that are put up. Part of the ways that we have tried to do this is just kind of talk about business the way normal people talk about business, because it's not something that's avoidable. We all discuss business. Money is what drives our lives. So it's looking at money as being part of business. So one of the ways that we have done this, especially speaking for myself, is I used to handle an entrepreneurship rollout that we call Hustle. So we launched it trying to draw younger audiences because, newspaper revenues being what they are, this is an important demographic. So Hustle was just trying to show you that, entrepreneurship is in everything that we do, and it's the way of the future. And I think a lot of young people are now getting out of university, and you're not thinking about being employed. You're thinking about what kind of business can I launch? So we wanted to just better prepare students for that kind of future. So we wanted to think about, hiring your A team and figuring out your cash flows without calling it cash flows. So it's just kind of making business a bit more accessible. Now, when it comes to public finance and public finance administration, I think it's been a bit difficult in terms of getting the right language to speak to audiences about, especially illicit financial flows. But I think one of the ways to do this, especially for speaking for myself again and for the organization that I work for, is trying to make sure the language remains, again, accessible. What we learned when we're in media, and I don't know if this has changed, but our audience, we try and get to the level of a 12-year-old. So the language that we use should ideally speak to someone who is 12 years old. They shouldn't get confused about what we're saying. So when it comes to talking about illicit financial flows, even the term itself can get a bit, complicated. So it's trying to break that down and just looking at what's the impact of corruption on even just economic growth. So it could be breaking it down in whatever way we are able to do it and try and get the conversation going. I think personally, one of the stories I'm most excited about that we did recently was even just looking at where does Kenya's food come from. And you look at, we have all these farmers, we have all this money that goes into agriculture, but you realize that something as basic as onions, a majority of it is not grown locally. We get it from China and it's cheap in a supermarket, And those are things that matter to every household. Like now you chop up your onions, you fry them, they don't turn brown like they used to. That's because they're not grown here. So it's not GMO, but there's things that are done to the crops that we import from external markets and all that. So it's trying to just make business, money, finance, all that a lot more accessible to the public. And I hope you'll stay on this journey with that. So I think the media is an important platform and we need the kind of feedback that these kinds of platforms provide, just to know what you're getting right and what you can do better. So thank you.
Thank you very much, Kaure. The kind of teacher who should teach the afternoon classes, right?
Not you. Excellent. We're good. Back to you, Daktari.
Okay.
Apologies.
Thank you. I was just saying, Kaure, please have questions for Kaure. I can assure you that without journalists, probably actually without journalists, we wouldn't be having this session here, because it's journalists who really break the news. So whether it's the Panama Papers or the Pandora box and the papers in there, you wouldn't have had an idea about this. I often read books, but that's a long way after the journalists have broken this news. I hope that we can get McKenna to join us from the Center for Fiscal Studies at the University of Nairobi. Please.
Yes, thank you so much, Tom. I am Warida McKenna from the Committee on Fiscal Studies. We are a team of multidisciplinary researchers and individuals with similar interests, linking the field of taxation with how we collect our revenue, how we spend, with a focus on raising living standards and growing our socioeconomic position from where we have been all this time. In connection to this and the topic that we're talking about today, which is combating illicit financial flows and ensuring that we are able to have an inclusive and equitable resource distribution around the country, I would like to give a brief introduction to our current research and link it to Professor Tia's book, which is Financing for Africa. So we already understand how far we are in terms of healthcare and education in Kenya, which are the two main things I'll talk about today. In terms of the reports that we've had, Kenya's hospital beds filling up, for example, in August, where Machakos level 5 hospitals had beds filling up and people were just outside, they were in pain, they were very sick, and money that is lost in illicit financial flows, in tax avoidance, in corruption cases could be used to actually help in ensuring that social welfare is really cared for in this country. Additionally, we can also see that in education, how there have been so many people dropping out, so many students dropping out, a lot of unemployment rates because of the disconnect between how education is funded, how different systems of education are not properly planned for in terms of tax policies. And that actually affects our day-to-day lives, seeing as healthcare and education is something that we actually get to see in our day-to-day lives. So these trends are common in other African countries as well. And it is our duty to ensure that public goods in our countries are shared equitably and in an inclusive nature. So in tax matters, we should not only look at the legality of policies, it is also time that we look at the social fabric of our society. How are we promoting the human rights that allow us to access information, participate in terms of not only understanding information that is in the policies that governments have, but also understanding the initiatives that governments are taking. For example, when they borrow debt, how are we to know how much debt and what it is used for if we cannot access such information, if we are not able to know that it is our right as citizens to understand and also get this information? So in terms of research, this is how we are able to promote and disseminate different kinds of information to ensure that ourselves and the citizens of this country and in the African continent are able to understand the policy making processes and how this can actually result in economic development and growth. So more specifically, in looking at the book by Professor Tiawaris, the book is called Financing for Africa. And we get to understand how important it is for us to get a sense of the tax structure of African states, understand how the disconnect between policies and constitutions affect us in our day-to-day lives. Furthermore, we also get to know how it is difficult to disseminate information, where we have lack of access to information due to the different governments, African governments, where we are not able to access this information publicly, while it is information that actually relates to us in a direct manner, not only on the tax basis, but also in terms of our socioeconomic position. How are we able to understand the tax that we are paying? Where is it spent? And all these tax, the different kinds of tax, whether it's VAT, whether it's income tax, why is it being collected? So this book gives us a really good analysis of how government revenue should be generated, why it should be generated the way it is being generated in terms of the design and policies that we have, and how we can have a good tax system that is equitable to our taxpayers and encourage inclusiveness in government expenditure. So I mentioned earlier that at CFS we have a multidisciplinary team. This is to ensure that when discussing tax issues, we are able to understand how these decisions that we make, how these policies that we make may guide us in planning, having a strategy and foresight in collecting revenue, planning for expenditure, to ensure that we achieve social and economic empowerment. And finally, the book helps us to understand how governments can link their activities with qualities such as fairness and equitable legitimacy, to ensure that as we move forward, we can move away from the old policies that were used when we were still being colonized, to having new policies that are in line with the current environment that we are in. This will ensure that we are able to not only respond to incoming issues like the COVID-19 pandemic that we are currently facing right now, but also how to deal with illicit financial flows, how to understand our systems in such a way that if education policies are being put up, how are we able to go with better designs and policies? So there's a Swahili proverb that says, wealth, if you use it, comes to an end, and learning, if you use it, increases. So in conclusion, without quality research and dissemination of information, our efforts in socioeconomic growth and building our economic justice systems will be in vain, essentially. So in this discussion, and even as we go home and we continue reading newspapers and books, and in our discussions with each other. It is my hope that we'll continue promoting research, we'll continue building capacity even between ourselves and managing knowledge, sharing information about tax, and trying to better understand how the policies in our countries affect us. So it's a good thing that we are all attending this session, because we are now able to get an understanding of how, as individuals, we can not only participate, but we can also understand our rights in terms of accessing information, in terms of disseminating the same information, and understanding the policies that guide our taxation rules, and how this can affect how each and everyone can benefit from the expenditure and the collection of taxes in our country. Thank you so much.
I can vouch. I hardly promote books. I mean, I review books. I've been reviewing books for almost 20 years. But I can vouch that you probably need to read a Tia Waris book. And one of the reasons you need to read that book is that for the young people who are in this audience, Africa has to actually rethink the models of funding its public projects, funding its social goods. I'll just give you two examples here. If you live in Nairobi and you go to any restaurant and you are served fish, about 68% of the cost of that dish is actually taxes. If you think about it this way, that when the fish is trapped from the waters, it's basically free. It's free, but the moment it gets into the boat, there is actually a local taxation. And if it crosses from one county into the next, it will most likely encounter excise. What do you call it? Cess. And if it gets onto the bus, it encounters tax that is actually levied on the fuel. And if it lands at the city market, it encounters tax. And the person selling you probably had to get 3 different types of certificates in order to sell you that fish. That is before it gets into the hotel where it's processed, and the hotel pays a series of taxes. At least there are 3 of them, that 2 of them are very much common on the receipts. I think they still have the development tax that used to fund utalii, and the normal tax. So think about it, that if fish comes from Turkana or Lake Victoria and arrives in Nairobi, you're probably paying 68%. I'm not so sure how many of us are in this room who remember Harambee secondary schools. If you're in this room and you remember that almost every district had an Harambee secondary school. Oh, there is one person here. And what happened with Harambee? There is 2. What happened with Harambee secondary schools is because the government could not build the schools, enough schools. The local population actually collected effort, somebody donated land, and they taxed themselves and built the schools. And over time, they handed over the schools to the government. Now, surprise, surprise, some of those schools still ran. But do you know how parents are being taxed today? Yesterday, I was paying school fees for my nephew, who is supposed to be in a government school for free, but they asked them for 2 reams of foolscaps. You have to report to school with 2 reams of foolscaps. And then what they used to call tuition fee is now called motivation fee. These are taxes. So if you're in this room and you are young and you still don't have a child that you're supporting, think hard and long why you need to understand the mechanisms through which taxes work. You should be able to walk into government hospital and get medication for free. The last example, I studied at Kisumu Boys High School and I lived in Manyata, and in between was the New Nyanza General Hospital. For fun, from school, we would just pass through the hospital and get free Panadol. If you ask for penicillin, they would start asking you, una ile ugonjwa? And so I don't want to go into that. But I think what Atia Wari's book says and what McKenna is saying is that it's fundamentally important that we start to understand how taxes work locally, why your MCA is a much more important person than your MP. That's because your MCA lives with you. So you can actually approach him and say the allocation for this year, for this this county, how much was it? I think I would want to call on Shitemi Hamadi. I think is available on Africa Uncensored. And then Kenneth Okwaro will close it off in terms of the presentations, and then we'll open it up for discussion.
Good afternoon, everyone. My name is Shitemi Hamadi. I work at Africa Uncensored, which is an investigative and in-depth journalism media house in Kenya and the region. At Africa Uncensored, I handle projects. Thank you very much, Dr. Diambo, for the invitation, as well as the East Africa Tax Justice Network and NTA. I think our involvement in this is potentially timely or coinciding.
Just to come in, Shitemi, are you present? We are awaiting.
Can I be heard? Am I being heard? Hello? Hello?
We can hear you.
Okay, thank you. So I was saying, I think the context upon which we were invited is around the Pandora Papers, the story that went on air earlier this month. But I'll start quickly by giving a comment on what Dr. Diambo just provided here on around understanding mechanisms through which taxes work or funding generally. And I think for us as Africa Uncensored, one of the things that we are trying also to think of our own way in which we will be able to generate our revenues or generate revenues that would continuously give us the editorial independence to decide our content. So, I mean, for instance, today we do not have any revenue sources from government or any advertising, which we treasure and we hope to continue with it. And so one way in which we are now growing it is we have launched our own platform that will allow us to generate revenue. So if, for instance, today you want to see the Pandora Papers video or story, you'd go to shaharavideos.com, which is the platform that content is, and that you'll be able to pay a few coins and watch it. So our way of trying to see that audiences can support our revenue generation mechanism to grow us and enable us to continuously do in-depth and investigative journalism. So I was asked to speak on database journalism. Now, and investigative journalism at the same time. So, I mean, I'll start by saying 2 points. One is, I think that story or database and investigative journalism brings out the key importance of the watchdog role that journalism plays or journalists play in society. And when we look at a watchdog role, we are looking at two main things. Specific to this story. One is the constitutional requirement or dictate that state officers are not supposed to have foreign bank accounts, and if they do, then they must declare with the EACC. So one would want to ask or find out whether actually the EACC have any documentation in that regard regarding the president. And secondly, is largely around conversations of the fight against corruption, which the person leading it or publicly leading it is the president, who's actually on the other hand also holding, both personally and also through the family, holding foreign bank account. There are secretive companies in a jurisdiction that is very, very, very secretive. The second thing is around framing of content. When you have this data, how do you frame that content in your story? In my view, the framing here was simply the issue of the Kenyatta family actually owning secretive accounts and businesses. That was the only framing issue. Now framing is quite important for media because that can open opportunities or a window for defamation. So it's quite important that the framing of the story that you write or you work on based on the data that you have becomes quite clear to you. But as you do these two main things, it's quite important that one, there's an interest actually in investigative journalism. If you do not have that interest, then it becomes quite difficult for you to, or for the public to actually see similar stories. But this interest also comes with a reputation. I think John Alanamu, who's a co-founder of the institution, does have reputable or a character of known repute internationally, and so it became easy for him to be relied upon to do such a story. The second thing is about access to data. For this story, I think we were the only ones in this region to do it, but it's also because we are part of the International Consortium of Investigative Journalism. There are hardly others, I want to imagine, in these countries, if I were to be very specific. But also, if they are there, they were not given access to the data. Why? It's also because whether they can be believed or trusted that they'll do justice to the story. The third thing is around sourcing and expertise that to bring in to interpret the data that you have. I think the sourcing for these stories was beyond reproach, especially in also trying to get the right of reply from the Kenyatta family. And the other thing is also about media ownership. Would your media owner allow you to actually work on any investigative story that you want or not? They're quite untouchable. I mean, I think if Gasheshe Kaugire can speak about the Standard, for instance, whether they'll be allowed to actually write any investigative story, potentially which they would consider negative against their owner. That's a very different subject. I think so. From where we come in now, that was at least easier for us to do it, which is quite important for anyone or in public conversations around data research, investigative journalism. I think it's quite important that we are aware that the Pandora Papers provided an interesting or important opportunity for public debate, whether it's on illicit financial flows, on taxation, on corruption and money laundering, which is an important role media also plays. But now what happens once this information is out in public? For instance, the president himself did say that he'll give a comprehensive statement. But now we're still waiting for it, and we want to hopefully see how exactly he'll exonerate himself or explain his dealings and that of his family. So perhaps I would stop there, and where there'll be other questions, pick it up from there. Thank you very much.
Thank you, Shitemi. I think the thing to just add on to that is that what Shitemi doesn't say is that it's a very lonely job in this country to be an investigative journalist. I had a chance to sit in a room with one of the oldest investigative journalists in this country who no longer actually does the work. And he was chasing a story. And somebody gave him a hint that there was a story. And he completely forgot to prepare adequately and walked into a room, and the door was locked. And he was asked, do you really want the story? Or do you want your life? And he says he wasn't a prayerful man, but on that day he prayed that the Lord may visit his mercies on his family. So Shitemi won't say that now, probably in the discussion. But the point that raises is that we need to be very civically vigilant. The money, you actually pay tax the moment you are born, right? The moment you are born, you have a tax demand on you from the government. You know how? Your birth certificate. You pay they used to call it a stamp duty. You actually pay for it. So the nurse gives you a cheat, but when you go to collect the birth certificate, they actually tax you. And what the plans are is that they will give you a number at birth. And with that number, they can trace you all over. So the idea is that how do we think about relating to investigative journalists, relating to organizations that actually do the tracking of how money flows from one end to the other? And I can tell you, it's absolutely difficult to track money that flows across borders. And the reason it's difficult is that there are companies and front companies and lawyers. And it always reminds me that about 4 years ago, I was flying into Switzerland and I was sitting next to, behind me was a senior lawyer. And I kept on smiling and wondering, what is he really going to do in Switzerland? Because as you all know, Switzerland is where they actually keep our money. Our good money is kept in Switzerland. What annoys is that our good chocolate is kept in Switzerland, and our good cocoa, I mean, and that what annoys is that our good coffee goes to Switzerland and they mix it with chicory. If you're in this room and you don't know what chicory is, go and find out. It's a useless plant, and they mix the coffee with chicory to increase the grammage, and then they sell you at a higher cost because it's branded in Switzerland. So let's have I think we were waiting for River. I hope she's come. Because if she hasn't come, I would like to ask Kenneth Okwaro to speak to us, and then we open it up.
Well, thank you very much, Dr. My name is Kenneth Okwaro. I work for a research organization here in Nairobi. We focus on bolstering access to information for public policy analysis to get more people involved in how our country is run, but using concrete information and data so that we remove the colloquialness and bring in the data and the statistics that make our conversations more concrete. So I was called to this panel to talk about a piece of work that we did with the East Africa Tax Governance Network about linking public debt and what we are calling fiscal justice. And I think it's a place that has been tackled from yesterday up to today, including the book that Professor Waris is launching. So I'd like to take the time that I've been given to talk about our experience, generating data and what we see, whether people want the information, how receptive they are, and also how easy or how hard it is to get quality research out there informing policy. So I wanted to pick it up from a very common conversation we're having right now just before the elections. There is this guy on this side who said he wants to give young people 6,000 bob from next year if you are not employed. And there are people who are saying, where is he going to get the money? And some people are saying we can't afford it. And some are saying they're just things he's saying. But that is a politician who might or has a chance to get into government. And somebody has said in the previous government of Kibaki, he said they're going to give people free primary education. And he was asked when, and he said on Monday, that was a Saturday. So it is possible for the person who is saying he'll give people 6,000 to get into government, and he will make policy on our behalf. And therefore, it is important for us to interrogate these things that they say. And that is where we come in. Is 6,000 possible based on the taxes we collect, based on the debt that we have already accumulated? Is it even a good idea, right? And even if it were a good idea, is this the right time to do it? And you can pick another conversation. There's another guy also who is saying, I'll give you these small implements, and you get out there and you do your own business and you uplift yourself as a young person, and then you contribute to the economy and we build it up. And so again, there are questions. Does it work? Where has it worked? What is the evidence? So our experience has been one that many of us prefer very colorful conversations that we take to Facebook or to Twitter, and sometimes also nowadays on TikTok and the rest of the places. But when you bring people down to the facts of the matter, we get bored. And what I'm talking about is the attitude that we have for information. We want our government to be run based on, research and statistics. But when people bring you data, look at this room. How many seats are here? But I counted when we began, we were around 55. And the number is going as we continue. So what I'm saying about this point is, as Kenyans, there are people who are spending time, and they're also lonely, just as investigative journalists, because they sit in the night and crunch a lot of information from KNBS and from global databases to bring you something that they have done that can inform policy. So what is our attitude towards research or concrete information that has been brought forth? Do we want to use them? Right? Do journalists want to pick up research that has been done to inform a story? Right? Do people in government want to listen to alternative sources of information that can inform policy? Or do people who are activating activists that are out there on the streets saying, we don't want this, we don't want that, to what extent are they open to research? The other thing I want to talk about, and perhaps has been indicated, has been mentioned by Shitemi Apet, is about accessing information that is useful for producing, the kind of analysis that can inform policy. For a long time, we've been working in the space of, going to KNBS. There's a time when they would only give you hard copied things, or they would send you to a place called on Haile Selassie Avenue, called the government printers, where they would ask you to pay some money and pick up a booklet of the budget of the country or a particular year. Then one day we asked them, but the person who printed this thing worked on it on a computer, and it was on an Excel format that somebody could actually use to manipulate. But they get you to go there to buy all these things, and then you come back and spend so much money or time to make this kind of data in machine readable format that you can utilize. So there are some challenges regarding access to information. Yes, we have an access to information law that gives people that power, gives people the mandates them to go and access that information. But there are some further challenges. I mean, there's a day when I think there's a journalist from NTV who sat at an interview with the president of the country, and they asked him about the contract for the standard gauge railway. He said, can we have the contract so that we can see what you guys signed in there? And so that these things that everyone is struggling in their minds, was it viable? Why did we get into it? Then he was told that he will not get it. And I doubt he has gotten it today. And it is a story that has it's getting into the 8 years plus. And you see how it's impacting our economy, how it's impacting our ability to raise revenues and to invest in things like health and education. So the issue about access to information is still alive. As people who sit on the side of research and analysis require information, like Shitemi was saying, if they didn't access that kind of data that they used when they are doing the stories about the Pandora Papers, I mean, they wouldn't get to that. So a lot of advocacy is still necessary to get people to access and utilize the information. The other thing I want to talk about, and the last one, is regarding how we communicate. Right now, a lot of the population in the country is young. You will find them with something like this or on a social media platform. And that's what they prefer, because this is the day and age where that is happening. So when you ask people whether they flip their newspapers, somebody will ask you, is that the go-to source of information that 70% of the population that is young prefers? So when we produce information, or when we do a data and analysis that is supposed to inform policy and the public, how do we communicate it? So there's this guy who wakes up in the morning every day, and they put their phone on and some light like that, and they talk or they dance and it's on TikTok or it goes to WhatsApp. How can we get the concrete analysis that I did at the office before I came here in a medium that is in the sort of things that we see when we wake up? Those things we call memes. The guys who call themselves meme lords. And there are people nowadays who are famous on social media. How can we get those guys you're calling meme lords with the kind of information we're talking about? If we are saying we have this concrete data that shows we've taken too much state and it is impacting the road that is supposed to be built there, or the Panadols that you used to pick that you cannot find now, how can we get them into that format so that we communicate to the people that we want to communicate with? I wish to stop there. Thank you.
Thank you very much. I think the last point, which is probably the biggest take home, is think about the archive that has the data you need. So how many of you here actually know where the government printer is? Because if you don't know, then you're in trouble. Because this is where they print the Kenya Gazette. And the Kenya Gazette is an important thing because that's where the Kenya Gazette has got almost every policy information you need. How many of you here know where Hesabu House is? Hesabu House, where they crunch the numbers, Kenya National Bureau of Statistics, where they do the numbers. Yeah. So we need to go back and think, because these are places that are real. This is where they'll say something like, casually, journalists say like 60% of the country's population is made up of young people, the youth, but they never say what is the youth. Because when I was growing up, I knew guys called KANU Youth Wingers. They were as young as 17 years and as old as 67. I'll be 50 next year. I would still be a KANU Youth Winger if the party were to come into power. I would want to be a KANU Youth Winger because there was money in there. You could tax people. A KANU Youth Winger could just walk into the compound and say, you guys don't have the party membership. And they would say, shika hiyo mbuzi, shika hii kuku, and then they would bring you the party membership. So we need to know where the archive that determines how we think about taxes have been. There's a lady who's still alive, who I think if you are here and you are young and you want to really look for a story, you should look for her. She was the last person who was in charge of price control. This was a very powerful person. If she said bread will be 5 shillings, it would be 5 shillings. If she said soap would be 2 shillings, it would be 2 shillings. And these are small details that actually influence the way taxes are collected and how that money is subsequently used. So I think this conversation, what is largely saying is that we need to broadly think. Every time you step, my mother used to say, you need to step out of the house with 1 shilling because you might just step out of the house and there's a guy selling jugus and alikuwa anapimia mtu, and then you swipe it and you say, hiyo ni njugu ni shilingi moja. So there was a very important law in this country, probably Mzee remember it, called the vagrancy law. They could just arrest you and check. If you have any money, you would be let go. If you don't have any money, you would be put in, and for you to be got out, somebody would have to pay a fine. It's a fascinating, the Mzungus are fascinating people. You understand? They didn't want idlers walking in town who don't have money to spend. And nowadays, every character who doesn't have money, they walk in town. When you ask them, do you have any money? They say, pesa iko hapa. You understand? So, ladies and gentlemen, I am incredibly grateful that you sat here, you've been listening. I only saw one person dozing. And I normally generally encourage my students to doze because it's a very healthy habit. You understand? You need once in a while to doze. And don't worry even if the saliva comes out of the mouth. This kind of means your body is relaxed. You understand? Actually, I can tell you there are only 2 moments when your body ever gets relaxed. One, if you naturally doze, and the other one when you go to the toilet. The rest of them, you have bad dreams. Safaricom people are blocking your number. National Taxpayers Association is arguing with the government over not increasing tax. and you don't even have a child. Can you imagine? They are going to increase tax and you don't even have a child. So can we open this up? I will not talk anymore. It's for the 4+. I don't know where the river arrived, Jalipa. If she didn't, there's a roving mic. Please don't ask questions, engage in conversation. These people are also here to hear what you're thinking. Like the people from the Editors Guild are very shocked that you don't read the business pages. Now, that's a job for them to figure out how you can read the business. Thank you very much.
Thanks very much for the insights shared. So we do appreciate the great work that the media does, and as civil society players, I think it seems sometimes you're playing catch up, and so the media is really helping to highlight the issues around public finance management. But my concern is if you're at liberty to share this, in the course of coming up with these very good pieces, is there a room where whistleblowers, particularly within government, have been able to share this information? Or is there a place for that? So is it, a lot of it is your own digging, or are there people within the system that can be encouraged and have actually come out and reached out to the media fraternity with insider information? Because we understand it's a whole web. So without this type of people, how does that work out for you? Thank you.
Thank you for the opportunity. My name is Zachary Omboki, a health and science journalist working freelance based in Nairobi. I would just like to briefly share an experience that I had when I was trying to pursue a story during my days working at a mainstream media house. I was trying to follow up a story on the Ashes to Ashes report, which I think was done by the Tax Justice Network. And I remember as soon as I contacted the representative at BAT, I made a number of phone calls, of which they told me, talk to so-and-so. They kept on switching. They transferred me to about 3 different people until I finally was told to talk to the lawyer, who conveniently was not available at that time. And then a few minutes later, a very senior colleague of mine walked up the stairs to my desk to hand me that lawyer's contacts. And after I talked to that lawyer, he promised me a response, which I have not received to date. The long and short of it is that the story never saw the light of the day. To the Editors Guild. And mine would be to ask if there are ways in which we can divorce the marketing department from the content that goes into the papers or that goes onto the broadcast queue, because many a times we'd even find the marketing guys coming up and saying, you know, that story that you did cost us this and that much, many millions in lost revenue because the client is unhappy with the story. Is there a way that media houses can actually work, that the editorial department can work independently from the marketing guys who are chasing sales revenue gained through advertising, so that some of these stories see the light of day? I know that is one of the single biggest obstacles to many of the stories on the misbehavior by the tobacco industry in this country as regards profit shifting and many of those other things that they do, shifting, moving money into offshore accounts and doing using the double tax agreement to deny our country revenue and block our development agenda, in addition to costing our economy about 29 billion shillings in health costs, treating people who are suffering from tobacco-related diseases. Is there a way to divorce the marketing guys and these other people from the editorial process? Thank you.
If I could just answer them quickly. For the first question, I think, yes, there's a lot of space for whistleblowers from CSOs and from the government. A lot of the stories that have been done have actually come from those kinds of places. Like Ken was mentioning, sometimes the official government data doesn't really doesn't go below the surface. So you do need someone who will come up and tell you, actually, this is the situation currently. or you'll find like information that's online or that's available is on 2018, but you're looking at a case that involves something from 2020. So I think there's a lot of space for it. And a lot of journalists are working very closely with CSOs and governments and whistleblowers. And it's also what Shitemi was saying, that like the Pandora Papers, that's basically a whistleblowing story, you know. So the platforms exist and the collaboration is there. It could definitely be a lot better, but there's a lot of fear in operating, especially around the investigatives field. Like Dr. was mentioning, it's very lonely, and sometimes it comes down to your life or the story. And one of the things that we say now is that no story is worth your life, which is a sad place to have reached, but it is what it is. So it's unfortunate, and I wish we could improve a lot of those processes. But I think a lot of stories are being told that would otherwise have remained hidden. So I'm happy for that. And I'm hoping to see also a lot more collaboration within the media space so that we use our platforms and reach the various audiences on a much broader level without really kind of holding information and thinking, you know, I want the ratings for the Standard to look much better than for the Nation or whatever it is. At the end of the day, we are serving an audience that doesn't really care where the information has come from. They just care about the information. So I'm looking forward to kind of that future. And then onto the second question, it's such a difficult thing, and we really, really want to divorce commercial interests from content, from the issue of putting out content. And like Shitemi was also saying, a lot of the stories we wouldn't touch because, you know, our owner is our owner. So there's that push to kind of figure out how else can we get revenue for the Standard, especially, or mainstream media or legacy media. Actually, when the government pulled out advertising and set up the government advertising unit, it became tied. Getting MyGov became tied to how you cover government news. So of course, at some point, you realize that, you know, you're running a business. It's not really a charity, but how media is structured, a lot of the work that it does is a public good. It's not really a commercial entity. So there's that fight between commercial teams and editorial teams to kind of figure out where is this middle ground and how can we get the government kind of less involved, or even your advertisers, how do we get them less involved in the content that is put out? But I think it's a struggle, and like our African Censored is doing, where you kind of get grants and all that, but you also hope that that kind of money can be self-sustaining. We're all trying to get into reader revenue. That maybe research organizations also exist because they are also helping shed light with maybe less I don't know how to call it, but you know how when a story comes from the Standard, you'll think this is Gideon talking, but they are less, they have less of that burden, so they can speak more authoritatively and just give you the news as it is or the numbers as it is. So I think yes, a lot of there's potential. But I think it's something that we need to work towards more deliberately, especially around collaborations and partnerships. Thank
you. So if there's no other question, perhaps I could weigh in on that.
Reaction, the four speakers, or anything in your chest that you would want to exhale.
My question goes to Ken. In terms of the research that you do and the content that you have, how do you make sure that it's covered on a more mainstream level? Like what do you do with the research that you put out?
Well, thank you for that question. I think one thing that people who are in our space struggle with is
how to get the outcomes of our research out there, especially to the people who we want to listen to them. Many times we've had to look for partnerships with journalists, for example, people like Mr. Omboki, who has just asked a question before, so that when, let's say, a piece of work has come out, to see what is the most interesting thing in it and how can it go out there. And this challenge still usually is someone will tell you this week's news cycle, whatever you're talking about, doesn't fit. So sometimes we go to the angle of doing opinion pieces where you try and fit in some research work into an opinion piece, which are also not very easy to get out there. Sometimes we have dissemination workshops where we invite journalists who sit and listen to whatever research work was, and in the jabber jabber of which they say this one line. The problem with that is we don't have control. So at the end of it, we usually have this problem where you're saying I was misquoted by the media, because the thing they picked up perhaps is the most glittering thing about what we were talking about. So in the end of it, yes, there's a lot of content, but because of the way the media works, the headline will be different from what you wanted people to pick up. And it's still a challenge. But also we have this on media platforms like websites and stuff that we also try to publish our own and encourage people to do. Thank you.
Okay. Any other intervention? Oh yes. Oh yes. Need to respond.
This is just a suggestion. Maybe one of the ways we can also use to get this content to be picked up by the legacy media, as you called it. I've always been calling it mainstream media. Thank you for that one. We can use Twitter to do, those one-liners. The way an organization like yours would probably say, maybe just like that statistic that 60% Kenyans are youth. So if you have, you pick what is the most interesting part of that report. Maybe if it is a report about, I know there was a report that came out, I think there was a study done by Population Services International a few years ago that said that Kenyan men use an average of 10 condoms each per year only. So, if you put in a line like that, like Kenyan men only use 10 condoms per year on your Twitter, just one line. New study shows. I think any journalist passing through going through Twitter and probably picking that up would be interested to find out more. And probably that would create more debate and create more interest. So I think Twitter is also the online spaces, the social media spaces, the social networks are also very important spaces for creating interest and debate around the issues that we feel more strongly about as being issues that should be discussed in the public space or should become material for story, further debate. Thank you.
Okay, any reaction from our the two speakers on the virtual platform?
Yeah, Shitemi here. I mean, I think there was a comment that was made around whistleblowers. Yes, for the most part, it is whistleblowers that provide what you could call the leaks or the lead that an investigative journalist picks up to delve deeper into the subject and also try and make, because most of them are quite complex, try and make sense of them and also find where the story is. But before you get to a whistleblower providing it, there has to be some history of HUD so that that whistleblower can believe you and know that you'll make good use of the information that they are providing to you. And also make sure that you'll not face the situation that has been described earlier, where somebody else, within that media house can, will come to you and provide you some information that will ask exactly how do you know that I'm working on this story. Now, but that comes with you having using your own wits to dig. Sometimes you find information is in the public domain. Reports, for instance, that are out there published by various agencies exist, and there is something that is an anomaly somewhere. So if you don't have that curious mind, then it will actually be very difficult for you to get that information first, use it to build your reputation, and then you can be able to get to a situation or a place where a whistleblower will come up to provide you with the information. It's also very difficult. I think that the second point is around what used to be called the Chinese wall, breaking the Chinese wall between whistleblowers, between marketing and editorial. I think that's a terrible place where media houses are today. If you ask me, those walls continue coming down. A lot of those financial decisions are made not based on content, but based on business. But we have had a scenario where I can, for instance, vouch for one media house where the Big Green, they did a story about them. They were angered by that story because they felt it is negative, and they pulled out of the advertising. The person who was at the leadership, the editorial director, told them, okay, if that's what you said, not a problem. For the next 8 months, it was bare knuckles. Fortunately, unfortunately, the Big Green came back, told them, okay, how can we have a conversation around it? So sometimes the leadership of that editorial entity has a very critical role to play in actually deciding that, no, our editorial independence will not be infringed by commercial interests. Until that happens, then it also become quite difficult. I mean, if you take a few minutes to just look through who are the CEOs of our top media houses and ask yourself whether any of them is a journalist. If you can answer yourself why hardly is a journalist given that position, you'd know why these entities are work the way they work. It has been said elsewhere, media is the only business that the Constitution is protecting under Article 34. Now, so and how exactly does media take that authority that have been given to them? Majority of our media houses are private, so they are profit oriented, with the exception of the Kenya News Agency that is run by the Ministry of Information and what I call the state broadcaster, not the public broadcaster, which also has its limitations in terms of how much it receives from the exchequer and also its own ability to generate revenue. So until that is actually sorted, I think we'll be here for some time. And that's why I think the more institutions that are able to provide their own sources of revenue. So for instance, when you see Standard Nation have come up with their own paywalls so that to grow their reader revenue or audience revenues. And one actually hopes that the management actually decides whatever you're making, especially in terms of product, will be for public good, will go towards building the media houses, not for actually their own private interest. Now, the other point is around having more entities, perhaps like African Sense, that come up, being independent, being forthright, being bold, in doing investigative and deep journalism. As Dr. said, it's quite lonely. I mean, I'll give you, for instance, there have been quite some fundamental changes around the office where we occupy. Majority of us, I think, are still a bit underground today, or rather not necessarily very, very public, because some of this work also has its own risk, which you must be able to accept that they exist, even as we say, no story is worth your life. What protective measures are you putting in place to ensure that tomorrow you can still tell that story that is important for the public? Thank you very much.
McKenna?
Yes. I can hear you. Okay. So, well, these are really great sentiments from the importance of having information to also the importance of whistleblowing on such issues that affect our day-to-day lives. For me, it would be to say that in terms of information, although it is difficult sometimes to get it, at the Committee on Fiscal Studies, we host a resource bank that has a lot of information on different issues on illicit financial flows, digital economy. And in all this, we also, in terms of now how we share this information, because I've had some of the panelists talk about how they have opinion pieces, how they disseminate information through workshops, which are really good ideas. We also host tax talks and also share this information virtually. This is through YouTube. This is another place I think we could really use in terms of disseminating information, especially on matters tax and matters that influence how we vote, how we even participate in policies. And so I think with those comments, I would encourage everyone to visit our website, which is the CFS website, cfs.unbi.ac.ke, and just look through the data sets, the Journal on Financing for Development. These are really good resources that will not only enhance the various pieces that you work on, but also give you a broader sentiment of the Kenyan landscape in matters tax. Thank you.
Panelists. The only thing I can say is that especially the National Taxpayers Association, I think we have to engage in education throughout. We have to educate people. It's always assumed that the work you do reaches the audience it's supposed to reach, but it's actually the audience that it's not intended to reach that it should reach. Because if you're engaging with legislators, you're engaging with the MCAs, you're engaging with the county government officials, it is these young people here on whose behalf the government is borrowing that actually you should be talking to. And I like giving examples because some of these examples really live with us. So you have some of our counties collecting annually 600 million shillings, for example, and then receiving 6 billion shillings. I mean, this doesn't make sense, right? And that's why they spend the money in Nairobi building apartments. It doesn't make sense this way. You cannot eat, sorry, I was going to say something. You cannot eat chicken and chips every day. Lunch, supper, lunch, supper, lunch, supper. You'll be running a huge deficit, which you can't do, right? So how is it we allow governments and local governments to do that? And the reason that happens is because many people, for example, in Migori, don't know that the government barely collects, the Migori County government barely collects 600 million shillings in taxes every year. We receive 6 billion, and it may not be able to account for that. So a body like a National Taxpayers Association, which actually crunches these numbers, does the research. A body like Tax Justice Network, for example, that actually crunches these numbers and does this work. How do you make this available to all of us? How do you make it available on radio? How do you make it available a little bit on TV? How I read 4 newspapers every morning, the People Daily, the Star, National Standard, and I can tell you for sure, I open the economic pages first, followed by sports, and then I go back to the news. I no longer read international news because these are wire stories, almost all of them. So ladies and gentlemen, I think as people who live here and probably who don't have a second passport, if at all you have a passport, and people, some of us have ancestry in Uganda, but we are not claiming our ancestry there. And if you're hanging out around here, it's important to start to think, how do you engage your MCA, your MP? How do you engage the local chief? How do you ask questions about tax? And forums like these are absolutely important for educative reasons. The only thing I can hope for is that everybody here is broadly thinking about how to go and retell this story to the next guy. I'm a storyteller, so the only thing I pick from here that I go away with is how will I write a story about something like this. But I'm very grateful for the organizers. I'm very grateful for the panelists. But most important, I'm very grateful for the audience that has sat here and contributed. And people do contribute even if they don't ask questions or say something. And thank you, Mwakazi, and back to you. Thank you very much.
Well, thank you so much. Big round of applause to Dr. Tom Odhiambo, together with the panelists. Well done. Thank you so much. You may kindly take your seats. And those joining us via Zoom, thank you so much to all the panelists. We are coming to that place where we're saying, this is the baton. Go out there and make a difference. And to usher us into that realm, please, once again, put your hands together for Bwana Leonard Wanyama, talking to us about handing over of IFF's action plan to Kenya's caucus on IFFs. A big round of applause to Bwana Leonard once again.
Good afternoon. Hello. I'm sorry I'm disrupting the dozing. I know now that is the real health break, unlike the other one we were told when we relax. But I guess at this point in time, the initial plan was that the few representatives we had invited would be with us for this long, but of course, it seems they're held up with other activities. Nonetheless, I want to commit that we are going to be drafting a document from this meeting, and we will be handing it over to them. This event has followed from two other events, that being the TGNA General Assembly, of which NTA is a member of the wider TGNA family, and also a meeting with the Africa Parliamentary Network on Illicit Financial Flows and Taxation. One of the things that came from these two meetings was that parliamentarians were going to form specific caucuses that were going to speak to tax issues and IFFs in their various parliament across Africa. We were in Senegal with members of parliament from Kenya, Uganda, Tanzania, and Burundi. And one commitment was that we were going to work together to form these parliamentary caucuses as an easy channel to send those all these sentiments to them so that they can speak to these issues in parliament. For those of you who were there yesterday, Honorable Nancy Abisai has been helping us and guiding us through this process because we imagine that we know how to channel these conversations through a parliamentary process, but when you get to the nitty-gritty of procedure and nuances and political scheming and whatnot, it's one of the ways in which we find ourselves or our issues not moving. And so she has given us a hand, I think for a period of 1.5 years now, in trying to get these issues across. But what next? This event is part of continental-wide activities across Africa for the whole of this week. If you have time, and if you're interested, for instance, in comparative conversations and even more information about what we are talking about, not only from a Kenya perspective, but also in terms of what is happening in Africa, the issues, debates, the positions. As you saw in the morning, we had quite an interesting debate on what people thought about debt. So all that is taking place over the course of the next 3 days on the TGNA platforms. There is a website, you can register there and join the conversations, and you will be enlightened a bit more on the movement we are building for fair taxation in Africa. Down to us, I think specific to us here today, there is a lot of research. We will be happy to share with you if you can reach out to us. We will also look for a way to, again, have more of these conversations. A lot of the organizations that came here actually have a lot of very interesting research. If you think of tobacco tax, NTA and IILA have a lot of resources, and I think they've published both the research and the submissions that they've made to Parliament. So if you want to know how a parliamentary submission is made, it will be good to just check out their websites. For ourselves, we are doing a lot in terms of double taxation agreements between EATGN and TGNA. We have quite a number of studies on that. But as I said earlier, we are working next to develop a regional mapping study that will show us which countries have what DTAs and what are the stages, and then try to put in a bit of analysis in terms of what is going on in that regard. Also just figuring out the questions of regional tax harmonization. But also if you look at the studies that our colleague here, Kenneth Okwaro, has helped us with, linking debt to taxation, Okumba's study on human rights-based approaches. These are all very informative documents. That one in particular, I feel, is a good document to start us off in terms of the basic questions to start asking our leadership. And there are others. Yesterday, I think it was very interesting to see Twaweza and their perception study on taxation. I think theirs has come, it's 2 months after our own tax survey, but I was very happy to see that even in the 2 months, it's like the positions have solidified. I don't know whether it's as they get closer to the elections, Kenyans are becoming more clear on what the issues are, but we hope to have a lot more of these engagements going forward, and we hope to share them with you. Because this is opening a door to speaking to the ministry, to speaking to the agencies, and to speaking to Parliament. I think a lot of people want to know what Kenyans think on various issues. And as tax bodies, I think it's important that we put the tax and debt questions forward for consideration. Of course, I won't forget TISA and their research on debt. Neither will I forget the infographics. I think IEA has very nice infographics for your use. If you have time, please have a look. And then also, I just wanted to inform you, the Institute for Public Finance of Kenya has a number of activities. I think they have county activities where they're doing budget monitoring. I think it will be good to look into that in the next 3 days as well. So we are getting to a point of convergence where taxation and questions of the revenue cycle, from where it is collected, how it's allocated, and how it is spent, are becoming a very important question for each and every Kenyan. I believe, just like the pursuit of the Constitution, the journey to being a better citizenry is right at the heart of these tax debates that we're having. And so even if it takes another 10 years, I think we will get to a better country once we have these issues on our fingertips. So this is what we will be taking forward. A lot of our activities will be built on what we are working on now. And we hope that you will be with us in this journey going forward. To close, Daktari has told us about where the good money goes. But I also want to tell you a different story that I found very interesting. I love these journeys to what used to be called the Northern Frontier, whether it is Turkana or, you know, those counties that are now, they used to be called marginalized. They still are, but those counties have very interesting histories. I was fortunate to fly there. I think the next time I go, I want to go by road. And it was very interesting that flying over a space for 5 minutes, I couldn't see a single hut. It was just very sparse and very dry. We land, we see, we are told a ward in Turkana could be the size of a constituency in Nairobi. We were conducting research, going door to door, trying our best to find information. And so we were very fortunate to go to the office of the Director of Finance, which is not something that will happen somewhere like in Nairobi. That kind of office is a Sirikali area in Nairobi, but there, because they are young county, they have a very young person who's the Director of Finance. Like you could see her walking into the office, authority, she's the one who knows, and people really respect what she's doing. But because of culture and whatnot, I think they still even haven't adopted the Sirikali behavior. So we walked in and we saw the list of how much they're getting from each and every ward. And I was so surprised that there was a ward for all the revenue collection that they'd done. They had the highest, in a number of months, the highest they'd ever got was 12,000 shillings or something to that effect. And this ward probably is the size of a constituency here. And yet then someone would have the guts to steal money from that county, pull out the resources for the hospitals and whatnot. And that's the kind of logic we have to try and stop. And therefore, as I said, whichever way and in whatever space, when we get the opportunity to participate, to give voice, to speak and so forth, in whatever way we can, whether it is through the stories, through a research paper, or through parliamentary involvement, let's not shy away. Let's take those opportunities and make this country better. And with that, thank you very much.
Big round of applause to Leonard. Thank you so much. When you get the opportunity to participate, take it so that we can make our country better. In the meantime, I'd kindly request, please, in honor of these two wonderful people, Abigail and Victor, let us give them a standing ovation. These are the sign language interpreters. Please let us all stand up and just give them a big round of applause. They've done such an amazing work. Abigail, Victor, well done, well done. Thank you so much. It's an honor. You may kindly take your seats. We're coming to that place where now we close. But I've been wondering, as I close, it was an honor serving you as the moderator. I've been wondering, is it just a dream that one day we will become first world country? I don't know about you, but I think it's possible. We should, because they say in the 60s we started very well, not just Kenya, but the whole of Africa. But I cite the example of this one country that stood out from third world to first world. But then consider this after you watch this. Dilapidated infrastructure.
We had to lock up people without trial, whether they are communists, whether they are language chauvinists or religious extremists. If you don't do that, the country would be in ruins today. Whoever governs Singapore must have that iron in him, or give it up. This is not a game of cards. This is your life and mine. I've spent a whole lifetime building this. And as long as I'm in charge, nobody's going to knock it down.
From third world to first world. He believed it.
That we wouldn't be here, we would not have made the economic progress if we had not intervened on very personal matters. Who your neighbor is, how you live, the noise you make, how you spit or where you spit, or what language you use. Had we not done that and done it effectively, we would not be here today.
One man, committed, convinced, and listen to him.
And even from my sick bed, even if you are going to lower me into the grave and I feel that something is going wrong, I'll get up.
Now I wish, we'll have leaders like that, and I'm sure they're there. Some are even in this room. But as I close, I'm just wondering, when our time is through, what will the next generation say about us?
Let me ask you, because you know a lot of people, you told me you have a lot of friends, right? Yeah. Have you heard of Lee Kuan Yew?
Yeah, obviously.
And what did he do?
He built Singapore. He built houses. He did the tree. He planted trees. He cleaned Singapore and he made the Singapore a beautiful garden.
Anything you've learned from Mr. Lee Kuan Yew? Anything that you...
He's an intelligent person. He's brave and he does hardworking.
He's hardworking, yeah.
And he never gives up.
And he never gives up. That's right.
I hope that generation will say great things about us as we are gone and forgotten. Hopefully we will not be forgotten. To close for us, ladies and gentlemen, once again, she spoke to us yesterday, but she's at the forefront saying, join the journey. Let's continue on. Pesa zetu, haki yetu. Please put your hands together for the closing remarks for Miss Irene Otieno, National Coordinator, National Taxpayers Association.
Good evening. Good evening once again. Mko salama? Nashukuru sana kwa kupata fursa nyingine kuzungumza pamoja nasi. I know we have our online viewers, so I hope that Swahili has not, they've not missed anything. But I'm here simply to give the closing remarks. But you'll allow me 5 minutes. You can see I've been a bit quiet for the last 2 days. So then that means I've earned some extra minutes because the conference we have had here, and I must first thank our friends, the Tax Justice Network Africa, and our partners, Diaconia, the Ministry of Foreign Affairs of Finland, Okoa Uchumi Coalition. So I'm here giving the remarks and thanks on behalf of the larger group. First, allow me also to thank the people who are here, particularly our members. We have, as National Taxpayers Association, we work a lot with community members, because the discussion we are having here is these funds are mine and yours. So sitting here, we have the people first that you feel a pinch when money is not used are the vulnerable groups. So here today, I know we have the Boda Boda Association members, if I'm not wrong, represented here. We have our community units that are people abled differently, because sometimes we feel in terms of prioritization, we leave these groups out. And the theme for this conference and the Pan-African conference is how illicit financial flows continue to widen inequalities. And of course, these inequalities and this difference in service provision are heavily felt by people living with disabilities. I hope I've used people able differently, and the vulnerable and most marginalized groups. So first, I think the conference has given us an opportunity to take note of the fact that government has no money of its own. So what the government is using is money from the individual taxpayer and the corporate taxpayer. So that generally gives you ruhusa. Hatutasema hii pesa ni ya mama yako ama si ya mama yako, si ndio? Sababu ni pesa yetu squarely, the money we are talking about is ours. So we do not wait for any invitation to ask questions about it. In this conference, we have also highlighted what we all know in terms of the inefficiencies and the misuse of public funds. Anyone that has taken and had opportunity to look at the Auditor General's report, and that is a core area that National Taxpayers Association focuses on. You'll find that most of our public entities have bad audit reports, and this means that in as much as the Revenue Authority continues to seek and want to expand the tax base, our concern as an institution is you will bring more people, but if you're not sealing the loopholes, then even the people you're bringing on board will not improve public service delivery. And so we are really grateful that Twaweza was able to share its report that spoke clearly that most Kenyans feel that they cannot pay, and they would rather not pay for taxes because of the poor public services that they have. I like giving my own example. I think last week I was not able to pay for my garbage collection. I just felt like not paying for some reason. I looked at my household budget and it was too much. So I said, this one can wait. So I've been looking at the garbage outside my gate, I think for 2-3 days, but it just made me think, when your government is taking a whole portion out of your pay as you earn, but your child is in a private school because public schools have challenges that there aren't enough of them. How many of our public schools are fast integrated so that even people living with disabilities can be there? Most children do not have that opportunity. So this means a taxpayer will still have to source education from somewhere else. The same taxpayer will still have to get healthcare separately. So even with your NHIF, if you have noticed, we agreed there are strides, but with NHIF, most times you can see the doctor, but you'll be sent to a private chemist and a pharmacy. So the critical questions we are asking, as our government tells us to support it by paying taxes, what are they doing in return? So as an institution, again, this conference gives us an opportunity to push back and have critical conversations. As an institution, we would want to see a change where discussions around the Finance Act are as critical as the election period. Because Kenyans, we are very keen about elections, keen about those other type of things. But we forget this critical discussion around the Finance Act that gives government authority to get money out of our purses. Are we asking where is the money going to? Are we having a conversation and saying, yes, we will pay this tax, but we are also then demanding that the audit reports must improve by 50%. So it is not a one-sided story. I'm happy that this conference also has given us an opportunity to contextualize the issues around illicit financial flows. For a long time, as a country and also as civil society players, our focus has been keenly on corruption. But with this conference, I trust that yourselves and us also as a civil society and media have been challenged to look and widen the scope on where we focus. When we look at illicit financial flows, it dwarfs what we lose as a nation and as the African continent by way of illicit financial flows. So this is an opportunity for us also to ask our government critical questions. When you look at the government document from Treasury, they have detailed that they want to reduce incentives and tax expenditures from 6% to 4%. But we want to quantify and find out what amount, instead of even the percentages, what amount are we losing as a country in illicit financial flows? If we address illicit financial flows, we'll be able to reduce the tax rates. Remember, within the COVID period, wangapi wako wanalipo ile pay as you earn, we enjoyed a very short break. For some time, our salaries or what you get went high because government reduced the pay as you earn for people to be able to manage the COVID-19 situation. But that did not last around more than 6 months. Government and Treasury came back and said they are losing so much revenue that they have to go back to the 30%. But why doesn't the same government use the same speed to address issues of corruption and illicit financial flows? So my concern as a citizen and also as a National Taxpayers Association is government is very careful to take care of its area. So when its revenues dip by a short, they seek to see how to address that. But when the money we have given them is lost and is clearly lost, there is very slow movement, if at all, to be able to get this money back. So this is also an opportunity to be able to demand action, fast action, equivalent to how fast government addresses concerns that look at revenue dip. We as an institution were not happy about how the COVID-19 mitigation plans were, in as far as helping the businesses, helping households to safely build back after COVID-19. If anyone was able to receive some money that government said it was giving the vulnerable during COVID-19, that amount was not more than 6,000. But if we look at the allowances that our state and public officers are getting, per day when your state or public officer is out, and government through the National Wage Bill Conference gave clear indication that they were keen to address the wage bill. And a key aspect was to address allowances. But of course, this has not happened. So when we are pushing and government is telling us that we must support its revenue collection, we also must ask that same government, if a significant part of our budget is going to wages and salaries, and we are saying there's unemployment, and only 17% of Kenyans are employed by the same government directly, but the same 17 are taking more than 70% of the revenues. Is there not a problem? We need to balance that. If all of us are bringing in revenue, then all of us should be able to benefit from the same. So my call to action also is to align with what my colleagues mentioned. I would particularly pick up what was stated by Wanjiru Gikonyo. When we are talking about fiscal consolidation, the government looks at the easier way out. It will cut what affects me and you. It is restructuring the universities, they have said. It is looking at the issues of education and healthcare to reduce how much it is using on that side. But it has not reduced key areas we see as wastage, those allowances that we keep talking about, the travels that the Auditor General has continued to highlight. Finally, allow me also to just mention that we must support some 2 or 3 institutions that have continued to stand with citizens of Kenya. I'd want to mention the Office of the Controller of Budget that has pushed back on some pressure from the government to withdraw or use public funds in a way that does not align with the Constitution. The Office of the Auditor General is also a critical office that has already highlighted budget shortfalls. So they are supposed to audit 47 counties, the national government, and many other public entities. Remember that our same parliament has been demanding for special audits, particularly when we had the issue of KEMSA. All of this requires resources, but the government is not sufficiently funding this institution. So we'd also push that as citizens, in whatever capacity you have, there are institutions that are standing for the rights of Mwananchi and taxpayers, and these institutions are the ones that we also must rally around. As Leonard has pointed out, the 2 days we have been together, we've looked at key IFF issues that touch on Kenya, and we now have a caucus of 3 or 4 MPs that I would want to recognize Honorable Abisai has been at the forefront of the issues around illicit financial flow at the regional level and is now spearheading the caucus for the Kenyan parliamentarians on illicit financial flows. She was with us yesterday, and we'd want to thank her. We'd also want to thank Honorable Shakil, who was with us and has been an anti-corruption crusader for the longest time. So we must appreciate him taking time and being here with us physically. Among the members of parliament that are in the IFF caucus, we also have Honorable Mishi, we have Honorable Eve Obara, and Honorable Oundo, who heads the Parliamentary Committee on Trade. So these are individuals that will carry the key recommendations and issues that we have spoken here. I had thanked all of the young people here because we have said that the hand of the future of this nation is in our hands as the younger generation. So we must thank you for having taken time to be with us. Allow me to thank the NTA chair who opened the conference yesterday. He's not with us now, but he just also conveys his thanks for making time to be with us. We had representatives from the National Treasury, representatives from the National Debt Office. From the CSO players, I would want to thank the panelists that have been with us. I would want to thank Madam Sheila of Transparency International. She's no stranger to Kenyans because they've highlighted the improvements that Kenyan is making in regards to corruption or the steps we are taking back. We also have Evans Juma from ISPAC, who's been with us and really raised issues around debt. Dr. Miruka did give a presentation, and we'd want to thank him. If I have, of course, I cannot forget the online participants that have been with us. Our friends from the media, we want to thank you so much. If I have left out anyone, I think Mr. Osedo will come to continue. I'm not very good with sometimes this, but Mr. Mwakazi, we also recognize your help in helping us put this together. I know we've taken note of the sign interpreters, and so thank you for that. Please engage with us. We have said that this is a conference that is still ongoing at the regional level. I think they will put the website where you can be able to gain more materials and also join the conversation regionally. So lastly, which I have already mentioned, is just to thank the Tax Justice Network Africa for assisting us also as an institution with the technical input on how to look at the illicit financial flows. As you are aware, NTA has over the years just been looking at scorecards, looking at how is money being used at the constituency and the county level. But we are happy that we've now expanded our scope to look at an area which we have discussed with you as the illicit financial flows. So with that, I'd also encourage you to engage with us as an institution. We have our regional offices in North Rift. We have another office in serving the Western and the Nyanza region. So please feel free to engage our website, our Twitter handle, and also just reach out and see how we can be able to work together to ensure that taxpayers' money is used well. Asanteni sana na mbarikiwe. Asante.
Wow. This is it. We come to the end of the conference, but of course we still continue on. I would like to welcome all of you to the networking tea starting now. So please don't leave. Let's connect at the networking tea moment. Asanteni sana, it was an honor serving you as the moderator. All the best. God bless Africa. God bless Kenya. God bless you, you. Asanteni sana. All the best.
علي بالشرب الخفيه